Okay, please can I welcome everyone to this meeting of the Audit and Governance Committee on Thursday, 17th of July from the Walton Suite, Winchester Guildhall. Time is 6:30 p.m. My name is Councillor Johnny Morris, Chairperson of the committee. This meeting is live streamed from the Council's YouTube channel, and the recording will also be available after the meeting. Subtitles can be switched on, and advice on how to turn these on is set up on our website. Can I remind members and anyone else speaking to use their microphones, and can everyone ensure mobile phones are on silent? In the unlikely event that it is necessary to evacuate the building, the fire alarm will sound. Please follow all the instructions given to you by our team. Turning to the agenda, item 1, apologies. We have apologies from Councillor Becker, the Cabinet member. Item number 2, disclosures of interest. Does anyone have any declarations of interest? I'll take that as a no. Number 3, the appointment of the Vice Chairperson for the 25-26 municipal year. Do you have any nominations? Councillor Powell.
I propose Councillor Chamberlain, please. You
may. Do we have a seconder?
Yes, I'd like to say.
Any other nominations? Then, by a unanimous lack of other nominations, Councillor Chamberlain is the Vice Chair. While he's making his way to his seat, I'll skip on to item 4, Chair's announcements. The previously scheduled meeting for the 25th of December only had a couple of items on it which were not time sensitive. So those items have been deferred to the following meeting. And so, although it says the meeting has been cancelled, it's all the stuff happening in that meeting will still be happening, but at a later date. Councillor Godfrey.
Thank you, Chairman. In the last municipal year, we ran out of time and had to have an additional meeting last year. I don't think that the planned annual load on this committee has been reduced. So how are we going to make up for that time towards the end of the year? Are we going to have an additional meeting to replace this one we've now cancelled?
Those items will be added to the November meeting. Did you want to speak?
At this stage, there are only 2 items for that meeting. We do always keep these things under review, so we will have to see how things go. But unfortunately, that meeting was falling in a very busy week already with local government reorganisation meetings. So yeah, we will keep under review.
My concern is that maybe September meeting was not appropriate, and 2 items doesn't necessarily mean dragging us all in. But come March this year, we had 15 items on one item on one agenda, and you know, we just did not cover them. Can we now schedule a meeting to make sure that all our work is properly scheduled?
Yes, as the year progresses, I mean, I think what we'd look to try and do is have a better spread between the November and I think it might be the February meeting, Liz. We'll look to have a better spread between those so we're not left in that position. But if it does look like we are in that situation, then that may be necessary, yes.
I would also add that this year we haven't been in an unusual position of having disclaimed audits coming in. So we've had more business than we would normally have. Okay. Moving to item 5, noting the Audit and Governance Work Programme, which is on pages 5 and 6. Councillor Power.
Thank you, Chairman. I note that the Auditor's Annual Report is scheduled for the 27th of November. Looking at the work plan for the auditors, which is later in the papers tonight, it says late November. I don't think we're going to have enough time to get the papers out in time, or there can be no certainty.
Thank you for that. I was going to ask that during their section of the evening to give us a more precise date for delivery. But if you want to answer now, go for it.
So it's a requirement of the new National Audit Office Code of Audit Practice to have the Auditor's Annual Report issued by late November. We would expect to have it available slightly ahead of that. So if there is a meeting in late November, we could bring that Auditor's Annual Report, I think, to that meeting.
For clarity then, I think we need the report 5 days before, 5 working days before in order to circulate that. Are you confident that we can meet that date?
Yes, we may not have fully completed our financial statements procedures then, but the VFM procedures that need to go in that report should be complete. So we need to have it ready and reported to you by the end of November to meet the code requirement.
Thank you. Item number 6 is minutes of the previous meeting held on the 25th of February 2025. Are these agreed as a correct record? Excellent. Moving to item 7, which is public participation, and we have Mr. Ian Tate, who would like to speak to us. I'm sure you're familiar with the setup, so when you're ready, thank you.
Thank you, Chair, for the opportunity to address this committee. I wish to raise some concerns I have regarding the financial control of the Winchester street markets. I've had an interest in the market for many years and was strongly supported the proposal to relocate the market in the High Street from Middlebrook Street back in 2010. Since that time, the market has hugely improved in both the quality of the stalls, the number of market traders, and very importantly, the revenue it generates for the council. I have spoken at a number of council meetings in support of the market. What I hadn't realised until around 4 years ago was that the Winchester market collect their pitch fees in cash. I was shocked to learn that even through COVID, when it was almost impossible to pay cash for anything due to the health concerns, the Winchester market continued to take the pitch fees in cash. I've questioned the market manager and he's explained that before the market contract was renewed, there was no intention to change that. The retendering took a long time, but it has now been completed. Last November, the economy team advised traders that the procurement for an operator to manage the Winchester Street markets had been undertaken. The preferred bidder was the existing market manager, and the decision was confirmed in February. As of today, the market pitch fees are still collected in cash. Often traders have to withdraw cash from the bank to pay the pitch fees because most of their business is transacted by card or phone. Also, traders who may be on the market from Thursday through to Saturday or Sunday are encouraged to pay their pitch fees in one go over the weekend. The policy document, you may not be familiar with it, says that the money should be banked each day. So over a weekend, and if there's a following on bank holiday, what happens to that money? I've calculated, as we know, the market turnover is £350,000 thereabouts, shifts during the course of the year, but 350 is the turnover. Calculate that sometimes there will be between £10,000 and £20,000 with the market manager. I have a banking and accountancy background. Taking cash is a red flag. Turkish barbers, Vietnamese nail bars, Kurdish mini supermarkets. The previous market manager, as some of you may know, Gary Simmons, a good guy as it happens, unfortunately served 12 weeks in prison for the theft from the Winchester market. He was a Winchester City Council employee. I've been assured that the market will shortly become a card phone payment system, but I cannot understand how the auditors have not highlighted this as a risk. In my book, it is a risk and something should be done. I know the answer will be it's just about to happen, but I've heard that now for 5 or 6 months, and I think, Chair.
Okay, Mr. Tate, you're out of time, unfortunately, but I'll give you a few seconds. Which item on the agenda do you think your concerns relate to? Because then we can.
Well, Chair, it is the audit process. So in looking at the risks of the operational risks within the City Council, the auditors should pick on, as they did with the car parking when that was a cash business, and unfortunately the council had incidents. You know, I worked for NatWest, they paid all the cash into NatWest. So there were incidents of theft. And so that's why they've tried to, that the council as a policy wants all the car parking charges to be paid for by electronically, no cash. I don't know from an auditor's perspective, what you'd want to know is electronically, how many market traders are there on the high street? If
Okay,
you're taking,
thank you, Mr. Tate. We have both our internal and external auditors here, and I'm sure they've noted what you said, and will be looking at it. Ms. Keys.
I'm happy to give some background if you'd like me to, Chair. The market management contract has recently been retendered and commenced earlier this year. That's absolutely correct. The new contract and the policy that we have does specify that pitch fees, we want them to be paid by a range of methods, including card, direct debit and bank transfers. And I know the team are working with the market management company to ensure the processes for collection and reconciliation of those fees through all of those routes is really robust. As set out in the internal audit plan, which is later on tonight's agenda, there is an internal audit review to gain assurance over the management of the markets, including the income collection and banking, following the introduction of the new contract arrangements. So we do recognise that, you know, collection of income is a risk area. And without robust collection and reconciliation processes, cash can pose a higher fraud risk than some of the other forms of payment. But during the last audit plan, the Southern Internal Audit Partnership undertook a piece of consultancy work with the team to try and set out and advise on the processes that we use to do that reconciliation. And committee members will have seen regular audits on the audit plans that come to this committee, covering income collection and banking. And we do that on a cyclical basis. So I'd just like to reassure committee that that is on the audit plan for this year, because we recognise the additional risks of collecting income in that form.
Thank you very much. It's much appreciated. Okay, moving on to item number 8, the external auditor's report. Simon Mathers to introduce. Thank you.
Thank you, Chair. Good evening, everyone. So this is the first of 2 reports that we have on the committee's business tonight. It's our final report for the 23-24 year and summarises our findings and conclusions for that year, the auditor's annual report. It is somewhat historic now, and the actual report was written back in April. It summarises the findings of our work on both financial statements and value for money arrangements. It doesn't really add a lot to the audit results report that we brought to the February meeting of the committee, but it does summarise our findings in those areas and also adds a full narrative commentary on value for money arrangements. In terms of the financial statements, as you know, we completed a very large proportion of the procedures we would ordinarily undertake in an audit, but we've discussed it at length at previous committees. We're still in the process to recover and reset local government audit and address the national backlog. For that reason, and the reason that we issued a disclaimed audit opinion in the preceding year, 22-23, we again issued a disclaimed audit opinion in 23-24. That's because we didn't have assurance over comparatives in the statements. We didn't have assurance over some brought forward balances and therefore movements, and therefore some closing balances. But we've talked about that previously. Our value for money reporting starts on page 29 of your papers, page 15 of the report, and our summary of VFM arrangements, which is a factual summary, is at Appendix A and starts on page 39 of the papers. In terms of VFM, as we reported in our audit results report, we raised 1 risk of significant weaknesses in the council's arrangements and then found 1 actual significant weakness in governance arrangements. This pertains to the external review that was commissioned around compliance with legal and regulatory requirements for housing revenue account properties and the issues that identified. We were reported by exception on that in our audit report, and we pick up on it again in the next item on the current year plan. I will stop there, I think, because the report is backward looking, but very happy to take any questions.
Thank you. Councillor Lee, would you like to take the opportunity to speak?
Thank you, Chair. Good evening, committee. I'd like to make a quick observation, if I may, Chair. It's a general observation, and that is inappropriate wording in some of the papers. That is the frequent use of "to note" in recommendations for the agenda papers. I'm sorry to start on a critical point. On my understanding from SIPFA and CFGS, they've raised concerns about the inappropriate use of the term "to note" in audit committee agendas and reports in local government. To note is discouraged, as I understand it, could imply passive receipt of information rather than active oversight, assurance and challenge. And I'm sure that's not the case here, but it's just an observation. Audit committees are not scrutiny bodies, as Mr. Johns highlighted, insurance bodies. Their role is to evaluate, interrogate, and where appropriate, make recommendations, not simply to receive and file reports, which is implied from that wording. So sorry to be critical in pointing that out. Anyway, I'll move on, and I appreciate this item is backward looking, but the covering paper seeks in this committee confirmation of acceptance of this report, and this raises in my mind several questions that I hope the committee will consider, and it sounds like they already have, and act on them if they haven't already. And the first one on page 23 questions how the council ensures it makes informed decisions and manages risk effectively. As we know, the corporate risk register is managed by the ELB with risk owners assigned. But given the identified weaknesses, will this committee, or has it already, sought changes to the council's governance arrangements, particularly around risk management, to prevent a repeat of the significant weaknesses identified on page 23, the property, plant, equipment, asset valuations, pension misstatements, resulting in a 4.69 million liability adjustment at page 27? And what actions will the committee recommend? Is it to scrutiny or cabinet to ensure effective remediation? And should improved arrangements be brought back to the committee for review? So I'd be grateful for the committee's views on that. Due to the delays, as we've heard, to unresolved concerns over asset valuation inputs, EY has issued a disclaimed audit opinion on the 26th of February 2025. So what does the committee believe are the potential worst case implications as we roll forward accounts into future accounts? Is this committee assured appropriate remedial steps are in place, and are they going to be actively monitored? And then on page 17, as has been mentioned, the HRA governance failures following an external review found that the council lacked adequate governance in relation to statutory housing duties and value for money criteria. So while I know an action has been taken, which is great, will this committee monitor the effectiveness of these new arrangements to ensure compliance going forward? And is a quarterly interval too long an interval given the high risks to tenants and our housing stock? Time is of the essence, and perhaps exceptional reporting mechanisms are perhaps needed. I'd be grateful for your views. Thank you.
Thank you. I think is Mr. Neil Cutler, do you want to respond to any of that, or you okay, I thought, okay. I was in a seminar yesterday on audit and governance committees regarding the and one of the things that came up was the wording of "to note," and it doesn't just mean in the most it doesn't just mean to note. It means to have regarded very thoroughly and systematically in great detail. But I'm not sure that it's necessary for us to change the wording to address that. Liz.
When we write the recommendations for these reports, we do try to avoid using the phrase "to note." There are some things which are brought to the committee purely for you to note, but in this example, we have phrased the recommendation takes the opportunity to discuss the contents of the annual audit report. So it is meant to be an active discussion, but at the end of the day, it's the report from our external auditors to the committee.
Thank you. So, Simon Mathis, yes.
I just wanted to come back on a couple of substantive points that were made in there. So in relation to the property, plant and equipment and investment property valuation issue and the errors, we raised recommendations for improvement as part of the audit results report that were partially accepted by officers. They're repeated in Appendix B of this report. When we come back and do the audit now in 24-25, we want to see that those recommendations are actioned, and I think it is a function of the committee to make sure that they are properly actioned. We weren't able to complete our procedures in that area, and that's something that we want to be able to do. The point on housing governance that you made, so things have moved on since we reported by exception. You're right, there was an action plan that was developed on the back of the external review. When we come onto our plan, what we want to be doing this year is again a risk of significant weakness in arrangements. We want to be seeing what progress has been made against that action plan and where the council is. So that's going to be our focus on VFM in the current year. And I agree, it's then a function of this committee to make sure that there is progress.
Director of Finance first.
Yeah, I just wanted to highlight to committee that the audits weren't disclaimed purely because of the risks around PPE and the findings of the auditors. So just to clarify, that the accounts would have had that disclaimed opinion, as all, I think virtually all local authority accounts had in that year. So it's not as a direct consequence of that.
Something like this.
Yeah, that's a really important point, and remiss of me not to mention it. It's absolutely to do with the national reset arrangement. So while that is an issue that still needs to be actioned and considered, the disclaimer is solely connected to the reset arrangements and the fact that we disclaimed the prior year, as I explained.
Cabinet Member for Finance.
Raise the detail on the governance on in terms of the housing compliance side of things, which I don't think is, this committee can make sure that the governance arrangements are correct, but it will be a report to every cabinet housing committee. You know, it's set now that there will be a report on progress against the action plan at that committee. Therefore, this committee can be assured that there is a process in place, and when the next audit comes, you'll be able to see that that process is in place and that there are significant improvements happening. And so that will be documented and minuted and be clear for the auditors.
Thank you, Finance.
Yeah, just to add to that, the housing department have come up with an action plan which is really robustly being monitored by the regulator for social housing, and is being discussed with them monthly, if not more often, I think. And then, as Councillor Cutler has said, the action plan is being monitored by Cabinet Committee Housing, and that's coming forward quarterly to be monitored by that group.
Mr. Mathis.
And I did just want to be clear, Councillor Cutler is correct that when we look at value for money, we are looking at your arrangements. We are looking at your processes. We're not looking at the substantive issue. We're looking at your arrangements to deal with it. And your role as an audit committee is to ensure that they are effective governance arrangements.
Thank you. I think when we come to item 16, which is annual governance statement, that has the detailed plan on the housing revenue account assurance regarding the governance issues on that account. So we might be able to discuss that in more detail when we come to item 16. Do you have questions on item 8, the external auditor's report? Councillor Godfrey.
Thank you. One of the items which led to the disclaimed opinion this year in question relates to the valuation of property. I wonder if the officers could explain more about why this difference of opinion and the method of evaluation has arisen, and why the auditors have taken a different view to the officers.
Director of Finance.
At a very high level, there is a certain amount of subjectivity around the valuation of property, plant and equipment. In the same way, if you asked several valuers to value your home to put it on the market, you might get several valuations. So there are indices and different assumptions used in the calculation of various factors affecting the valuations of the various different types of property. So we commission external experts to do that on our behalf, and we review the information that we get back from them. As part of the external audit testing, they ask their experts, and often they have different opinions. I think the difficulty is that we often run out of time for those two sets of valuers to come together and agree on a set of assumptions to use for the valuations.
Councillor Bailey Morgan.
Can I ask a similar question in relation to the pension liability calculation? And apologies if this has been discussed in previous committee meetings. This is my first one, so I'd be interested to know that. Thank you.
Yes, the council commissions actuaries through the pension fund to do that detailed work for us. That pension fund is independently organised, is independently audited by a different audit team. And last year there were some changes that came up following their audit work.
Simon Mathers.
And just to be clear, those errors in the assessment last year were not specific to Winchester. They all scheduled bodies within the Hampshire Pension Fund had a similar error in the initial IS 19 valuation. So it's not something, and that, you know, the work of the actuary is done at fund level. So it wasn't something that was specific to Winchester.
Councillor Godfrey.
Am I right in thinking that the weakness identified in this report in the housing governance area was identified by the City Council's processes and not by the external auditors?
Yes, that's correct. So the council, in response to the new regulations, did a piece of work with an external assessor to see how we would fare against those new regulations. And as a result of that piece of work, and as has been reported to council, we self-referred to the regulator of social housing, and then we shared all of the output of that work with our external audit team.
Before Councillor Godfrey, I'll take my turn myself and then we'll go back to you. The 23-24 audit was declaimed. Does that mean that we're going to get a rebate on the fees that we paid for that?
No. So we conducted the procedures that we would ordinarily undertake in an audit. We did virtually the same amount of work in 23-24 that we would do in any other audit year. The reason it was disclaimed is the disclaimer that was issued in the prior year. It will be ultimately it's for PSAA to determine the fee payable by the council. It's not something that we decide upon as your external auditor. It's not something that management decides upon. The contract is with PSAA, and it will determine what's reasonable.
I was only going to say, just a point of clarity, so for the 2022-23 audit, that was when it was very light touch and minimal work was done. For 2023-24, the auditors did indeed do the majority, if not all, of their standard procedures. But for 2022-23, there was a disclaimed audit opinion without doing the majority of the work.
Will I ask whether we received a rebate for that year?
Perhaps Mr. Madders could give us an update on that, please.
So PSAA determined the amount payable in that period. So in 22-23, there was minimal work done on the financial statements, but sufficient work done to be able to disclaim. We also did our value for money procedures in that year and reported on that. So PSAA has determined the amount payable based on those limited works across for the 22-23 year across all councils. The situation here is not at all unusual.
Thank you. Councillor Godfrey.
I'll follow on from that then. They may have done the PSAA required amount of work, but they billed us for a third more. again. I'm struggling looking at the report to see any value in this audit report. It doesn't give us any assurance on the financial statements either brought forward or being carried forward. It does not confirm the opening or closing balances. It gives us nothing which a normal audit process would allow us to rely on, and yet it charges us more. What value does this report give us?
Simon?
So the audit report on the in 23-24, we did undertake the vast majority of our plan procedures. So in terms of your closing balances, you have assurance over the majority of those closing balances. You don't have assurance over prior period comparatives in the statements, and you don't have assurance over in-year movements. But for a good majority of closing balances, you have that assurance. We need to do that work to begin the process of rebuilding assurance over a number of years. So the move to disclaim, and particularly the move to straight to disclaim in 22-23, was about addressing the national backlog in local government audit and was consistent across audit providers. We have to do a full amount of work now to be able to recover assurance to get you to position by 26, 27 at the latest, when we give, all things being equal, unqualified opinions again. Getting back to that position, plus we did a full programme of work. So the issues that we've reported and the recommendations that we've raised were based on that full programme of work.
If I may point out one thing on page 20 of this report, the lists of sufficient appropriate audit evidence is not present. Refers to opening balances, which comes from 22-23, which I can understand, but the closing balances on all the headings in that, all bullet points in that page, as a justification for a disclaimed opinion for 23-24. I don't understand how we are able to rely on the audit report as showing giving us any assurance without that a clearer statement, which is why I'm concerned about the value added or value given by this audit report. Why can we not have that assurance from this report?
Simon?
So the list, the bullet point list on page 20 that you refer to, is clear that in terms of the closing balance sheet, it's the reserves position that we can't give you assurance over, because that is dependent on the brought forward position and the valuation of property assets held at valuation. So we didn't complete our plan procedure on property, plant and equipment and IP valuation, as has just been explained. So it doesn't give you assurance there. We did test all of your I&E transactions as we ordinarily would. We vouched the cash flow statement, we vouched all the notes to the accounts and disclosures, and we vouched the whole of the top of the balance sheet, apart from property, plant and equipment valuation because of the issues with the valuation where we've raised recommendations. So we did virtually a full programme of work in 23-24.
And yet you charge us a third more.
We've charged you for areas that were beyond the scope of the audit. So where there were additional risks, as we ordinarily would, that we needed to address, we've raised additional fees. It will be for PSAA to determine whether they are payable or not.
So, Manager.
Mr. Marvers, we're looking at this scale fee variation of just over 69,000 for work on the 23-24 accounts. And, you know, if it's a disclaimed opinion, could you just put us through why you thought that extra fee was due, please?
So beneath the fee table that you can see on page 49 of the report, we're going to bullet out the constituent elements of the additional fee. They effectively tell you why we think the additional fee is due. So, for example, we had to undertake additional audit procedures to implement a new auditing standard, ISO 315 revised. That required us to look at the design and implementation effectiveness of controls in your IT systems. When the contract was agreed, that wasn't an in-scope standard. So the bullets reflect out of scope additional work that we've needed to do.
Okay, are there any circumstances whatsoever where you might consider a rebate due?
So it would be for PSAA to determine the final fee payable, but on the 22-23 year, where on the financial statements element of the audit, the fact that no full work wasn't undertaken was considered in the assessment of the amount of fee payable against the scale fee. So yes.
Yeah, I understand it's up to PSAA to approve it, but this was your recommendation. So I'm just wondering if you would ever make a recommendation and under what circumstances that perhaps a rebate might ever be due.
If the scale of work was lower than assumed by the scale fee, as it would have been on the financial statements in 22-23, that would be a reasonable thing to consider, yes.
Director of Finance.
It's beyond my powers to accept or reject the scale fee adjustments, but Mr. Mathers was kind enough to give me quite a good breakdown of what had caused all those variations, what it was on, and the time that the team had spent on it. So I have fed back to Mr. Mathers and disputed some of those areas. So he now refers that to PSAA to arbitrate between Ernst & Young and ourselves to determine the correct fee.
Thank you.
Can I ask the Director of Finance, because PSAA are the ones who are negotiating the levels of fees on our behalf, and it isn't Ernst & Young who are actually doing this. Firstly, could we request someone from PSAA comes to this committee so they can answer questions? Because I think their evaluations are of concern to members. And secondly, I'd ask, is there the option of us no longer using PSAA's services at some future point?
So two very separate parts. I'm very happy to request PSAA to send a representative to a future committee to talk to you about the process they go through. I don't know whether they've turned up to audit committees in the past, but I can certainly request that they do that for us. And secondly, PSAA are appointed or were appointed by the Local Government Association to work on behalf of councils so that we could benefit from large scale procurement and management of that contract. So there are a handful of authorities who aren't part of those PSAA arrangements. And I am not aware that they get better value for money and a better outcome from their auditing than we get through our current arrangements.
Thank you, it's much appreciated. Any other questions from members on the audit report? Councillor Godfrey.
On page 49, as we've been directed to look at it, I note that a significant amount of money has been, additional money has been expended on the property valuation effort. As this matter is in dispute as a methodology, why would we expect to pay to resolve something which is in dispute? We are using professional valuation people who are following the correct law. Why are the auditors charging us for giving a difference of opinion which is not required of them?
Mr. Mathers.
So the value of property, plant and equipment and investment property is a very significant number in the financial statements. In order to challenge the work of management specialists, we need to commission our own specialist where we think there is a risk, which we do. For the last 2 years, there have been differences between management specialists and our auditor specialist on that valuation. Our auditor specialist looks across valuers doing this work across councils all over the country. They are well positioned to determine whether the valuation is accurate or not, and we are bound to follow our own specialist view in relation to reporting. In fact, our regulators are extremely keen that we do engage specialists to challenge the work of management specialists in this area. If we get to a situation where we look at it in 1 year and there is no disagreement and we are content with the council's valuation, the risk level goes down. I think there is a valid conversation about, and it's a live conversation around the value of current valuing operational property, plant and equipment, because I don't know how useful that number is to users of the financial statements. Investment property is a different thing because that's useful because you're holding that for capital appreciation or revenue generation purposes. Operational property, plant and equipment that the council uses to deliver services, it's a less meaningful number, but as long as it's written in the financial reporting framework that you need to value it accurately, we need to challenge it in that way.
But am I right in thinking that the methodology for valuing such property and assets has not changed in the last few years, nor has our the large majority of our holdings? So the problem was well known when this contract was renegotiated. Why would we have to pay extra? Is this a weakness in the contract that you've signed?
No. So this is connected to risk. So the contract assumes a standard level of risk. This is riskier at the council and we raise a significant risk. And when we get to the plan, it's there again for 24-25 because we've consistently highlighted errors in this area in previous periods. And you'll have seen that in audit results reports that have come back to this committee.
But why is the risk risen? I can't understand why that risk has not been present for.
You've had about 3 supplementaries on this, so I just do it to finance. Do you want to?
I was only going to add that the reason for my dispute of that area of the fees is what you've said there, Councillor Godfrey, around this being a standard part of doing an audit. Reviewing our valuations is a standard part of the audit and should be included in the scale fee rather than the variation. So, you know, we leave it to PSAA to arbitrate for us.
So I should clarify, we are disputing the level of the fee, is that correct?
The scale fee adjustments, yes. So the scale fee is set by PSA at the beginning of the contract, so we were aware of that, and committee may remember that it shot up 151% since the last contract. So that is, there's no dispute over that. That's an agreed sum, and we pay that to the auditor as standard. But the scale fee adjustment is the piece that I have disputed.
Okay, any further questions, members? Okay, then I shall say any debate, moving on quickly, and then I'll say that we have noted with all due seriousness, depth and rigour this report, and move on to the next item. Item number 9, the external auditor's plan. Simon Matheson.
Thank you, Chair. So we move now to the current year and our 24-25 audit plan, which starts on page 55 of your papers. So we've now completed our planning procedures. The context of the audit, and we've just talked about it, is the national reset and recovery arrangements to address the backlog in local government audit. That's explained in the context section of the plan on page 60 of your papers, page 6 of our report. We're now in the recovery period, but in line with guidance issued by the NAO, at the end of this year, we still expect to issue a modified audit report. The statutory backstop date, so the date by which we must complete work, is the 27th of February next calendar year, 2026. But as you can see from the report and the timeline in it on page 87, page 33 of the report, we plan to complete our work by the end of this November. So the last auditor's annual report that you received for 23-24, you should receive the equivalent report in November this year. So in terms of reset and recovery, you can see that assurance is becoming more timely. The timetable is coming forward. Risks for the financial statement audit are summarised on pages 62 and 63 of papers, pages 8 and 9 of our report, and I'll walk you through those. So the first one is the presumptive risk of management override of controls. So this isn't something that's specific to the council. This is something that auditing standards require us to assume on each audit engagement. And they're required to assume that management will seek to commit fraud or otherwise misreport in the financial statements. So what do we do to address that? We look at those bits of the financial statements, those areas that are more subjective, more susceptible to bias, estimates, things that are more prone to manipulation. We also do a lot of testing of journals that move transactions around on the ledger and try to identify patterns that would indicate fraud. As a subset of that, our second risk is the inappropriate capitalisation of revenue expenditure. So across councils, there are significant pressures on revenue budgets, but there are capital funding sources that can't be used to finance revenue spend. There is therefore incentive for management to charge revenue expenditure to capital. What do we do to get assurance in that area? We look at things like your capital additions at a greater level of depth. So we do far more testing and we try to ensure that those capital additions are in fact capital in nature and not revenue. Again, we use our testing of journals to look for the inappropriate charging of revenue spend to capital. The next risk is the one that we've just been talking about. So this is the valuation of property, plant and equipment and investment property. We're narrowing it down this year. Actually, it's focused now on two valuation bases. So existing use value and fair value. We're not looking at DRC in that level of depth. Why is it a significant risk here? We've just talked about it because we've identified issues in previous periods. So we think it's an area we need to look at. It's a higher inherent risk across pretty much all of local government audit because it's inherently an estimate. It's informed by the work of management specialists. It's predicated on assumptions and therefore it's more prone to error. The next risk of material misstatement is the pension liability or asset valuation. So the council accounts for an IAS 19 net liability or assets in its account for the defined benefit pension scheme. Again, that's an accounting estimate. Again, that's determined by the work of management specialist, in this case, the actuary. Again, it's based on assumptions, and again, it's more susceptible to error. And indeed, we found the error last year. The final risk in the plan is around IFRS 16 implementation. So IFRS 16 is an accounting standard. It's not a new accounting standard, but it's been implemented for the first time in local government in 24-25. So it's the first time it's featured in the local government financial reporting framework. What does it mean? Well, many lease type arrangements where the council is lessee that were previously accounted for as operating leases and therefore revenue charges are likely to come onto the council's balance sheet. So the council will actually reflect an asset, a right of use asset and a matching liability. Why is it a risk? Because it's quite a lot of work for officers to do to determine arrangements that might be in scope and then do the required accounting in the financial statements. Materiality is set out on page 60 of the papers, page 8 of our report. So our overall planning materiality is at 2.1 million. That's based at 2% of the gross revenue spending of the council in the previous period at this stage. Why do we set it on expenditure? Because we think that's what's of most interest to the council stakeholders, what it actually spends. Performance materiality is at 70% of that overall materiality level. We think we can set it at 70% because we think the internal control environment is generally sound. Audit differences are 100,000 or 0.1 million. So if we identify misstatements from our work that management declines to adjust, we bring them to you, any difference above 100,000 to your attention as the audit committee, and you tell us whether you are happy for management's reasons for not adjusting. Value for money risk assessment starts on page 74 of papers, page 20 of the report. So we've completed our VFM risk assessment and we have identified one risk of significant weakness in the council's governance arrangements. So it is around housing governance in the issue that we've just discussed. So subsequent to our previous reporting and the external review being commissioned. The regulator for social housing has issued a report on the council, and that has identified areas for improvement. I won't go through those in detail. They're listed in the report. This is therefore a risk. As we've discussed, it's important that the council develops appropriate governance arrangements to be assured that it is addressing that risk. So what are we going to do? We're going to look at those governance arrangements. So we're going to look at the action plan in particular, and the rate of delivery against it, and whether we are assured that appropriate action is being taken to address those issues. The only other change on value for money in our reporting, we've talked about it already, is that we are required to report to you in our auditor's annual report by the end of November. That's a requirement of the new NAO code. I will stop there, but happy to take any questions.
Thank you. I think Councillor Lee wishes to speak on this item as well.
Thank you, Chair. I'd like to raise some general observations and some concerns and some questions which I hope the committee can help me with. The first one is, with council officers now being distracted or drawn into local government reorganisation work, will this divert focus away from restoring assurance, i.e. the core audit work, when we need to work with our auditing experts due to resource pressures? And on the subject of uncertain timelines for rebuilding assurance, EY are awaiting, as we've heard, for guidance from NAO and FRC to establish a consistent national approach for rebuilding audit assurance over the disclaimed periods. But until then, this council recovery, I suggest, is in limbo. So what are the actual implications for the council as in terms of that situation? And could the 2024-25 statutory audit backstop date shift if progress is made? I'd be grateful to try and understand that. In terms of the audit reforms, I understand that local audit offices in England are likely to be created. While this may help capacity nationally, some councils still can't even get and appoint independent audit committee members. So will this reform increase costs for the council with competition for auditors? And if so, should we be preparing for increased costs? Is this a risk we should be recognising? I welcome on page 66 the EY's inclusion of the climate-related risks in the audit scope. The CIPFA Code of Practice now expects councils to assess and disclose climate risks even without a formal task force financial climate duty, or TCFD for short. No doubt, I'm sure this will come, but just like this council has declared a climate emergency declaration, and there is an absence of government mandated climate duties, we nevertheless have gone on and delivered, which is fantastic. But we know that climate-related financial risks, as laid out by the code, can affect asset valuations, flood zones, carbon-intensive infrastructure, pensions and investment, service delivery costs, provisions and liabilities. So the audit reports elsewhere, as I've identified, show that many councils lack clear documentation of these risks. But the question is, should we be beginning to address these in this council? Is this committee assured or even confident our own risk and reporting frameworks are fit for purpose, given the CIPFA Code of Practice? Do we ignore it, or are we going to be adopting? Should our risk registers and finance processes plus audit process be strengthened to reflect these increasing risks? And similarly, I could say exactly the same for the nature and natural capital risks, which is part of a TNFD, which is the Task Force on Nature-Related Financial Disclosures, which is also emerging, and natural capital accounting is now being piloted. Is this again something this council should be piloting and reporting as part of future assurance planning? And should this be shown as part of our governance and risk management and be audited? I suggest these risks are real, and I wonder whether we should be ignoring them. And I welcome the committee's views on what we should be doing about this aspect of assurance and risk. Thank you.
Thank you. Unless anyone wants to pick up on any of the questions raised by Councillor Lee, we'll move to the members of the committee. Councillor Godfrey.
Thank you, Mr. Chairman. I was grateful for Mr. Maurer's summary of the audit plan for latest year. On page 77, the details of the proposed plan covering the HRA governance weakness are outlined. I wonder if you can give me assurance that we aren't going to have a duplicate amount of work assessing the work, recovery from a current weakness, as this is being governed by the work of a regulator. We're not going to see the work repeated by the auditor.
No, we wouldn't wish to do the work of the regulator. We want to look at the council's arrangements to address the findings of both the externally commissioned review and then the findings of the regulator. So we want to look at what you are doing to address those issues. It's an arrangements-based conclusion.
Yes, Power.
Thank you, Chairman. I have a couple of questions on pages 62 and 63. I'm looking at the PPE, IP, the valuations of operational equipment and assets. It has been a recurring theme at this committee that we have extra costs associated with this valuation. Are there any measures we can take to prevent these extra costs? Because it is a continual drain on resources, both manpower and financial. My second point is regarding the IFRS implementation. Could I ask Mrs. Keys if she is confident that we now have all those leases successfully recorded in a bomb-proof system that will stop this matter recurring on any report that comes to this committee in future? Thank you.
So if I take the first point on PPE IP, I would very much like not to be reporting these issues. So I would really want to get to a position where we think the risk is reduced and we have assurance over the council's valuer's work. I don't want to be in a position where we're doing additional work in this area each year. I'd like to move away from it, hence the recommendations made last year and the feedback that we've given. I would also add that the council, in terms of rebuilding assurance, the council is relatively unusual in that it values all of its property, plant and equipment and investment property annually. Investment property always has to be revalued annually. That's a requirement of the code, but most councils take a 5-year cyclical approach to PPE evaluation. So if we can get this right in 1 year and get to a point where we can give assurance over those numbers, we've caught that back up in terms of rebuild. So I'm as keen as members of the committee are to get this issue resolved.
Thank you. Liz, on the IFRS 16 implementation.
Certainly, this is a new accounting standard which is being rolled out across all councils, and at the bottom of that section of Mr. Mather's report, he does say that it's in common with the approach across all councils for 2024-25. It's been a long time in its implementation, so I know that the team have done lots of work to prepare us more than adequately for the implementation of it this year. And I think I can say that we're relatively low risk as councils go because we don't have a huge amount of leases.
Could I just come back on that very quickly as well? I would agree. So this is a risk because it's a new standard. There is a lot of work involved, and actually looking at accounts that have been published, some just do not have disclosures in at all this year that have been published now. We've raised it as a risk of material misstatement here. We've not said it's a significant risk, and that is reflective of the fact that our view of we looked at this in previous years in terms of the arrangements that the council's trying to put in place. We don't think it's as much of an issue here because of the work that's been done in advance as it might be in other places.
Councillor Brophy.
Actually, this overlaps slightly with what Councillor Lee was asking about on the effects of climate-related matters on page 66. I'd just be quite interested to learn a little bit more about the climate-related risks that you do look at. For example, I can see how there might be an impact on, say, property valuations and cost of insurances and things, or healthcare, for example, for staff. I'm just interested to see how you assess those, or what EY's approach would be, and the information that you receive from us, and if that's, in your view, comprehensive enough to continue to reevaluate based on the information you receive.
Yeah, so it's a growing part of the audit, and as you say, it does impact potentially all of those areas. As external auditors, where we tend to do more work where there is explicit reporting on climate related matters in the financial statements, or it has a very direct impact on income, expenditure, assets, liabilities reported. We're not yet in that position in local government, but it's the way, as you say, that the world is generally going, and certainly in corporate entities where there are targets that are linked very clearly to climate related matters, and that features as part of annual reports. We do specific procedures. So at the moment it's a fairly low risk area for the council's financial statements, but it's one where the level of risk is likely to increase as we move forward.
Just to follow up to that, do we have any, do you look at things like investments as well, and whether we have any potentially stranded assets in fossil fuels and things like that that we should be aware of? Or in pensions, for example, in pension funds?
So it's a matter of policy for the council to determine where it places its investments. What we are primarily concerned with is making sure that the valuation of those investments reported in the financial statements is accurate. So we don't make policy choices in terms of how you choose to invest funds, but we do make sure that the valuation is accurate for you in the accounts.
I have a question. You mentioned, I think, that you expected the 26-27 audits to be not disclaimed. Would you say that? Can we expect the 25-26 one to be not disclaimed?
No, I would expect the 25-26 audit to be modified in some way in line with the National Audit Office guidance. So we would not. It may not be a disclaimer, but it certainly will be modified in some way. It's quite clear that in terms of the timeline to recovery, nowhere can we get back to full recovery until 26-27. So nowhere is there potential to issue an unqualified opinion up to that point in time. Whether we can get there by that point in time is dependent on, for example, whether we can rebuild assurance on property, plant and equipment valuation and some of the issues that we've talked about. But all things being equal, if we get appropriate support for the accounts, that's the time frame for getting to a position where we could issue an unqualified opinion.
Thank you. Councillor Power.
Thank you, Chairman. As part of this, the recommendations of this report, we are asked to approve the audit fee. This is on page 94, I think, of the report. Could we ask Mrs. Keyes if she is happy for us to approve this audit fee, please, and the extra costs which are detailed?
So you're being asked to approve the scale fee for I have to get my financial years correct, the 2024-25 audit. So that is just the scale fee at this stage. There's no scale fee adjustment being proposed at this stage.
I'm looking at scale fee adjustment 59,265 on page 94.
That relates to the prior year, so that one is still under dispute.
I have a question on page 64, council materiality, the audit differences. It says other misstatements identified will be communicated to the extent that they merit the attention of the audit committee. And given that if you've found these differences, would it create you additional work for you to communicate them all to the audit committee? Because I'd imagine they would all merit our attention. Thank you.
So any misstatement over broadly 100,000, the management declines to adjust, we are required to report to you. Anything that management adjusts above that level, we we consider whether we need to report it to you or not. If you would like us to report all adjustments above that level, we would be happy to do that, corrected or not.
Unless our Director of Finance is going to tell me that's a terrible idea, I would suggest that.
No, I would only refer to the concept of materiality, and the idea of showing you material misstatements is to bring your attention to the things that really matter and the things that would have an influence on the user of the account. So that's why they set a materiality threshold. But if you want everything down to the penny, then so be it.
Ms. Mathers?
We would, of course, so for amounts lower than 100,000, if we thought it was qualitatively material, so there was something about it that was particularly significant, we would bring it to your attention. So we don't just look at things through a financial lens, but happy to be guided by the committee in terms of what they would like us to, what you would like us to bring back.
I'm just seeking reassurance that no one is turning a blind eye to anything which is below 100,000.
Absolutely not.
Thank you. Councillor Benny Morgan.
Thank you. How does the external audit approach integrate wider risks like the Transformation Challenge 2025, obviously the 3 million reduction, and also, I guess, any new risks, significant risks that may come up during the year? How are they integrated? Thank you.
So take those in. I'll take those order questions in reverse, if I may. So in terms of new risks, we continually plan through the year. So we completed our planning. We completed our planning procedures at the point in time that this report was written, which is a little while ago now. As we come into the execution phase, we'll go back, we'll update materiality, we'll revisit all of the work, both in relation to the financial statements and value for money that we did previously, to basically see if anything significant has changed and that would cause us to change our plan procedures. In terms of wider impacts on the audit, so on value for money, we look at a whole range of information sources to try and identify risk. So we look at, for example, the work of external regulators, the work of internal audit. We go through all of your committee minutes and look at what we're doing. We look at the understanding we have of the council's business, its entity level controls. We look at media reports, press reports. We look at across a holistic range of things to identify things that might impact our responsibilities in that area. Where there are financial challenges, a lot of our risks are really in the financial statements audit, kind of framed in financial challenges. So I spoke around that risk on the inappropriate capitalisation of revenue expenditure. That really is around across councils pressure on revenue budgets now, and the fact that there are ring-fenced capital financing sources that you can't use legally to prop up your revenue budget. There's clearly incentive for management everywhere to charge revenue items to capital, so that influences that risk. So that the environment in which the council operates and the broader issues are factored in through the work that we do each year to arrive at those risks.
Ms. Keats?
Only to add to what Mr. Mathers has said there, he did say that they work with internal audit, and our internal audit team did one of their pieces of work this year was a financial sustainability audit, so looking at the robustness of TC25, the savings plans, and the robustness of the detailed project.
Final thing I'll say, sorry, so the financial sustainability element of value for money is very much focused around the council's medium-term financial planning, annual budgeting cycle, all of those sorts of things. So we're looking at whether the council has arrangements to ensure that it is financially sustainable over the medium term.
Thank you. Any further questions from members? General discussion? That's gone quickly. Oh, sorry, debate, sorry. No, Councillor Chamberlain.
Thank you, Chair. So I think if we take a step back this evening, I think what we've heard is that 2022-23 limited audit undertaken, disclaimed audit opinion, and no commitment to rebate for the fees, which obviously is subject to PSSA review, as we've heard. 23-24 whilst majority of audit tasks undertaken again, a disclaimed audit opinion and scale fee adjustments of just under £60,000, which again is subject to PSA review. We also heard about the work items they're in dispute and the discussion about the sort of fee submitted for, I think we noted as specialist versus specialist earlier in the discussion on the previous paper. And I think we've just heard they're unlikely to achieve a full recovery in 24-25. Building on Councillor Power's question, we're asked to approve the indicative 24-25 annual audit fee within the paper that's before us. But actually, as a committee, I'm not sure whether, owing to the arrangements with the PSSA, that this is actually something we have any direct control over itself, whether that be the scale fee or the adjustment. So my personal view is I think as a committee, we should note our significant concern at the continued disclaimed audit opinions, which aren't really a satisfactory outcome for anyone, particularly when they're then billed against increased fees for which it appears that we have limited control. And I think, Chair, you raised a good point under the previous paper that we should invite the PSSA to Audit Governance to discuss this, because it is a continued concern for this committee.
Thank you. Any other debate? Can I ask Director of Finance if the committee approves the recommendation, approves the indicative annual audit fee, that does not affect the scale fees which are disputing. That's a separate matter, correct?
That's correct. You're just being asked to approve the scale fee.
The audit fee, you mean? We're just being asked to approve the annual audit fee.
Yes.
Yeah. Okay, so the recommendations that we note with all due depth, rigor and seriousness, the external auditor's strategy for 24-25 and the impact of disclaiming the 23-24 audit opinion, and we approve the indicative 24-25 annual audit fee. Agreed? Yes, thank you. I should wait for people to say something. Okay, moving on to item. Thank you for Sir Mathers. I think you done, Stephen?
That's me finished now. Thank you.
You
Thank
are
you, Chair.
absolutely finished. Okay. Item 10, the Treasury Management Outturn. It's Daniel O'Rourke to introduce.
Thank you, Chairman, and good evening, members. So this report covers the Treasury Management performance for the Council during 2024-25. I'll start by offering some reassurance and saying that all of the Treasury activity in the year complied with the Treasury Management strategy and all of the relevant legislation and accounting standards. I'll skip over talking about the external context in the report and I'll move straight to table 1, which is on page 106 of the report pack. So this gives a balance sheet summary at the end of the financial year and shows that net investments have increased moderately since the end of 2024, and that's owing to a reduction in external borrowing and an increase in balance sheet resources, which I'll speak to next. So looking at the Treasury Management position in table 2, you can see that net borrowing overall reduced by 8.4 million as 5.2 million pounds of borrowing was repaid and investments increased by 3.2 million pounds. So of that borrowing, 5 million pounds of that was repaid at maturity, with another 0.2 million being an EIP repayment, all of which was held with the PWLB. And that increase in investments was held in very liquid short-term assets to enable the council to meet its cash flow requirements. Looking to the benchmarking in table 5, the average credit rating of the portfolios remained consistent and in line with the comparators in the benchmarking exercise. Bail-in risk has increased and maturity has shortened, but that's given that there's an increased need for that liquidity. We have seen the returns on the portfolio decrease over the year, but this should be seen within the wider context of falling interest rates over the period. And actually, those returns are comparable again with the organisations in the benchmarking exercise. You can note that the pooled property fund has seen some bounce back in its capital value in the course of the year, and that's after quite a tough period for UK property, which is what the fund has invested in over the past couple of years. But income returns over that period, including this year, have remained quite strong. The statutory override regarding accounting for those pooled funds that was due to expire at the end of March of this year has now been extended until April 2029, so not something that needs to be worried about at this point in time. And a final point is just going through the indicators. So the benchmarking, the indicators that we look at on how the council is performing. You'll see that the council was compliant across the board with those prudential indicators that we look at. So that's all I was going to say, Chairman. Happy to take any questions if there are any. Thank you.
I think Councillor Lee requested to speak on this item. Is that correct? Okay. Questions from councillors. Councillor Godfrey.
Thank you, Mr. Chairman. Section 20.2, talking about the operational boundaries, authorised limits of boundaries. Is there any guidance on the maximum amount of debts that an authority should have in terms of percentage, or is that just an absolute?
There is guidance within the SIPFA code, so it outlines a certain number of things that we have to be mindful of. So we at the County Council don't actually we assist with setting these limits in conjunction with colleagues here at Winchester. So I don't know whether colleagues here might want to speak on it a little bit further, but there are certain things that it's measured against, but there isn't a set figure that we have to stick to. It's based on the authority, the authority in question.
Ms. Aiken, did you want to respond to this?
In essence, the council's borrowing has to be affordable, sustainable and prudent and proportionate to our size as a council. And the responsibility for that lies with my colleague Liz as Section 151 officer. So Liz will look at our overall budgets, our capital plans, etc., the income we expect to generate, and consider whether the limits we're setting are prudent, affordable and sustainable.
The only thing I was going to add was that the affordable, prudent and sustainable bit has been there for some time, and the requirement to be proportionate is relatively recently added to the guidance in response to some councils where you could argue that it wasn't in proportion to the size of the organisation.
Councillor Power.
Thank you, Chairman. I'm looking at the cash and cash equivalents balance at 15.7. 9.6 million seems quite a lot to have in cash. And I note the comment earlier on in the paper at 10 that there's an opportunity to better predict the need for cash, and maybe more immediate cash flow forecasting would help to bring this balance down. Is that a plan, or is it too difficult?
Yeah, Daniel will correct me if I'm wrong, but I believe one of the reasons cash and cash equivalents is such a high balance is that the council holds quite a lot of money in money market funds, which are considered cash and cash equivalents, and the rates that we're actually getting at the moment on short-term cash positions is actually quite comfortably high, right? Excuse me, relative to recent years.
I would just add to that. Neil's absolutely right. The other thing to note is what was covered previously in the report, in that given that there's a requirement for liquidity for the council, it makes more sense for us to hold them in these very liquid, predominantly money market funds, as Neil has alluded to. But just because those payment obligations, the need for cash is there, rather than being held in assets that we would have to sell or otherwise do something with it, it makes more sense to hold it in cash and equivalents.
I think, Chairman, that given the high rates that are available in short-term cash equivalents, that makes all sense in the world, but it doesn't show the way it's presented that we're managing our assets to the best value, and maybe we could tweak the presentation of that figure in some way. Thank you.
Yeah, I think from my layman's point of view, the word cash there creates mental images of a vault full of like pound notes and coins and stuff. And obviously, when you say cash, you don't actually mean physical cash. This is in a especially liquid bank account.
That's correct. I draw your attention to table 4, which does break it down in slightly more detail than what's given in table 2. So you can see there that the cash and equivalents is grouped for the purposes of this table within short-term investments. But you can see that, again, the vast majority of the balance as at the end of March was held in those money market funds. small amount in unsecured deposit accounts, so call accounts with banking counterparties. So there is a level of breakdown in that report, but it's not sat in a bank vault, you know, wads of cash. It is invested with a number of different counterparties for that security and liquidity.
Thank you. Any further questions from councillors? Councillor Bailey Morgan.
Just picking up on something Councillor Brophy asked in the previous agenda item. And again, I'm not sure if this is the best place to ask it, but in terms of the investments, are you able to speak more to the ethical nature of the investments and related to sort of climate change, etc.? Thank you.
So within the Treasury strategy, there is a section on the ESG considerations with regards to the Treasury activity. We work with our Treasury advisors, Arling Close, and they draw up a list of counterparties, which we then use in order to inform where we will place investments. Admittedly, ESG is something that probably doesn't have as high a priority as it should, but it is something that is being looked at ever more vigorously. It's probably worth highlighting that the nature of the investments, it's slightly different to, for example, the pension fund, where you're looking at a very long-term investment horizon with a number of different asset classes. The purposes, excuse me, the purposes of these investments, the Treasury investments, are to manage those cash balances. So by the nature of those investments, they tend to, I mean, you're talking about financial institutions, so there's obviously a level of risk there with regards to ESG, but it's probably not quite the same. We're not looking in the same way as you would with those very long-term investments. So as an example, we wouldn't be investing in equities directly with, you know, fossil fuel companies. We don't have that exposure. We're purely managing cash.
Thank you. I find it very reassuring because I passed a motion on that, I think, a couple of years ago. Any other questions from councillors? We move to the debate. Okay, and with no debate, I'll say that we we note with all due seriousness, depth and rigour, as usual, the annual Treasury Outturn Report 24-25. Thank you. Thank you. Moving on to item 11, the Workforce Report 24-25. Manjit Sidhu to introduce. Thank you.
Thank you, Chair. This is the Council's 5th annual workforce report. I'll just highlight a few items as part of my introduction. So you'll see that the first section is around establishment. So just to note, there's been a slight increase in our headcount from 446 to 460. This is mainly due to recruitment of temporary posts in our digital and transformation team. And plus some additional posts in housing compliance, and also some posts that were temporary or agency that are now on our headcount and our establishment. Next, moving on to our turnover, we've seen a decrease in our turnover to just over 12%. Generally in the public sector, anything between 10 and 15% is healthy. So again, I think that's a good figure there. We've continued to recruit apprenticeships across the council on that. And the next thing I really wanted to mention was around our learning and development programme. So we've now put over 100 managers through our learning and development programme. So we did a group late last year, and then we just done another group now in June. So over 100 managers attended that. The content of that programme was around, so it had elements of change, elements of communicating within teams, And you'll know that that was picked up in the employee survey last year as well around communication. So that was picked up as part of that. Work around values and how individuals and teams work by them, and things like prioritisation, some sort of really sort of basic grounding foundation training there. So I'm now just going to move on to sickness absence. So you will see from the report the sickness absence on page 125. You'll see that has slightly gone up to 6.71%. This is mainly an increase on long-term absence, and as members will know, sometimes when you have long-term sickness, it can be for serious conditions like cancer and other things, and therefore the figures can increase quite quickly on that. Mental health continues to be approximately a third of our overall sickness absence, and again we work proactively on mental health initiatives. We've got mental health first aiders, external counselling, employee assistance programme, and we continue to work with our managers on supporting that and supporting our long-term cases through occupational health. So next section is on equality. So just to say, the gender pay gap is going in the right direction, so that reduced slightly. And also we will continue to work with our workforce really on updating equalities data, just getting them to update their records. So we're hoping to do that, a real push over the autumn this year to get our data quality improved. And the final two sections, so a general HR update, so information on employee survey comparisons, and also just to let you know that we've had the survey for 2025 through, and the return is 68%, which is in line with previous years. So I think that's good. We're in the process of analysing that at the moment. But what I can say to members is that we've seen an increase, a positive increase in the communication scores, which is positive compared to previous years. And the plan for the employee survey is for that to go out via the Democratic Services update that is done. So more information on that. The very last section is local government reorganisation. So this will be a new section this year, and no doubt in future years it will be a larger section of the report. We continue with the regular chief exec briefings, and lots of really positive feedback from staff through the employee survey of how well they are received. I'm also looking to revive our staff forum. It's been in place for quite a period of time, but we are looking to just make sure all services are represented on that, and hoping to have the first meeting in later in September, October. So thank you. Happy to answer any questions.
Thank you. Did Councillor Lee wish to speak on this item? I think. Yep.
Yeah, thank you, Chair. Thank you. I think you answered a lot of my questions. I was going to ask what sort of target number which is reasonable for a healthy number for turnover, and you said 10 to 15%, and you answered my other question, so that's great. But I did wonder, Chair, whether this committee might want to request more granular data on workforce deployment in these reports, specifically a breakdown of FTE and part-time roles by function, along with absentee rates. I think this might help the Audit Committee and ELB better assess workforce well-being and identify any hotspots, risks for council plan and service delivery. And I had an issue in my mind, which hopefully you can dispel if it's not an issue, but I think it is, and that is the planning and enforcement function. There are clear concerns which council already knows about that are relevant, and I think they're applicable to para 10, the risk management concerns about performance outcomes and reputational risk. Transparent assurance of governance in this area, I think, is much needed with remedy. So can I request that this committee perhaps needs to look at the relevant workforce and governance data for the planning and enforcement area to start an assurance look for this critical service so they can be delivered more effectively? I mean, if this falls outside the Audit Committee remit, can you clarify that? And if need be, maybe it's a liaison with the Planning Committee chair to ensure the necessary assurance, assessment and oversight is taken forward as a matter of urgency. And I suggest the assessment going direct to Scrutiny Committee may not be the best first step. should come to audit committee, given the assurance and risk issues that I'm highlighting. I'd be grateful for your views. Thank you.
Thank you. Manjeet?
Just Chairman and members, just to explain really what happens with the data internal in the organisation. So we have quarterly ELB meetings on all workforce data, including establishment, including sickness. So actually we have a meeting next week where we are going through all of that data. So the whole workforce data. So we are looking at turnover, we're looking at absence, we're looking at, you know, now we've got the employee survey, anything that's coming up on the employee service. So we are and at ELB level, and again further discussions will happen at corporate heads of service and then again service leadership team. So we are looking, and I think that's been, this can chip in, that is quarterly done and there's action out there. So just to let you know what's happening within the organisation.
Thank you. Liz?
That's absolutely correct. And the responsibility for looking at that detailed data and taking actions as necessary around sickness rates, around the grading of staff, etc., is delegated on the scheme of delegation to officers. So that's an executive function. So the function of Audit and Governance Committee is relatively narrow around HR. And it's primarily to do with recruitment of the head of paid services, strategic directors, and disciplinary matters around specific employees. So we bring this report here annually for information and for making sure that we're transparent as an organisation, but the roles and responsibilities of this committee are relatively narrow.
Thank you. Councillor Brophy.
As per Councillor Lee, I was also going to ask you about the turnover rates and how those benchmarks. And I think it's more of a general observation, really, that some of the statistics presented here are relatively meaningless unless you have how it's been benchmarked and what the normal amount would be. So, for example, things like the length of service. I thought, oh, that's quite interesting. Sounds like a good length of service, but I don't know if that's what you would expect or if that's a concern or if it's just an entirely neutral fact. Similarly, things like long-term sickness is an interesting one because it strikes me that in an employee, if you have say 400 employees and you have 1 or 2 employees who are particularly severely affected by a condition, that would skew your numbers completely. So it's very difficult to know whether that's presenting a trend that we could look at and say, oh, there's a concern here that needs to be addressed, or whether it's just a specific event. I guess it's a difference between a weather event and a climate. You know, anything long term that keeps recurring is something we might want to look at and ask about, but actually presented so neutrally, it's quite difficult to understand what's here.
Chairman, just to answer that, I suppose the overall sickness figure is something to look at, and we would definitely look at the long term and short term separately as well to see what that trend is. So obviously today we can say, looking at that data, that sickness has increased. So therefore we are looking very carefully at those figures, and yes, it's marginally more for long-term sickness. So what we would do in those cases is just make sure that we are looking at our triggers, we're supporting managers through occupational health and making sure they're dealt with appropriately. If it was short-term absence, we'd be making sure, again, looking at return to work meetings, making sure they're happening, and you know, other mental health awareness and those kinds of things. So we are doing that, and I think what I would say to members at this stage is the overall figure is showing an increase. So we are looking at that. As far as turnover, we've looked in depth at turnover. So again, turnover, what we found is that less resignations this last year. So retirements are about the same, other things about the same, but less people moving on for career progression and other things. And we do, you know, we don't have lots of evidence about this. This is probably more perception. It's to do with local government review now, and as people are a little bit unsure, they may less likely to move. So hopefully that just gives you a general view. We are looking deeper into those figures to analyse them.
I suppose I should caveat the observation I made, but I did notice that the staff survey shows that the interventions you are making are very greatly appreciated. So It's more a case of if there's a wider trend in the workforce across, say, public sector that we need to be aware of. I suppose, should I see a report like this again, it's always useful to have a in line with expectations or concerning, just so we can understand how to understand that data really. Okay.
Councillor Power.
Thank you, Chairman. I'm looking at the tables on table 6, age profile of the workforce and the ethnicity profile, page 134. This committee has been somewhat preoccupied with our ageing workforce and the risk that poses to the council. I wonder if it would be possible to include last year's figures when we look at this chart to offer us reassurance that our workforce is not approaching retirement, and we don't want to lose them, but if they have to go, they have to go. Regarding the ethnicity profile, and I'm far more tenuous about this, I think, it would be nice if the workforce of the council represented the ethnicity of the communities we serve. Would we want to investigate the possibility of showing that against this table, in that it gives us more information about how close we are to that? Thank you, Chair.
Yes, I think on both of those fronts, but absolutely the age profile we can for future reports will make sure that you've got a comparison to look at, and the same with ethnicity, we can compare that against the community.
Councillor Godfrey.
Thank you. In my 21st year in this looking at personal reports, they get better every year. I do notice that the turnover has been stubbornly fixed at about 12 to 15% for all those 21 years. So not much you can do about that. And the length of service has always been remarkably high, despite that. What I'm interested in is in the page 123, 11.14, it says the council supports both apprenticeships and the National Graduate Development Programme. But in the previous page, it reports we have one apprentice and no graduate trainees. It doesn't sound like much of a support in practical terms. Why are we not using up the apprenticeship levy at least? We used to have 18 apprentices when we had the same, or largely the same number of staff. Are we really supporting apprenticeships?
Majid.
Yeah, so members, if I can point you to 11.16 on 123, page 123, you'll see that we've had 5 full-time apprenticeships this year, and 1 degree apprenticeship and 2 upskilling apprenticeships. So we had 4 last year and we've had 5 in the last year. We are yet very much, I think we've got at certain levels of our workforce, that's our first preference to appoint them as apprenticeships. So I've got somebody in my team who works with managers on looking for apprenticeships if there's no apprenticeship programs, really looking for them. So yeah, we're fully supportive still on that. Graduates, yeah, I don't know whether Liz, you wanted to add on that one.
Yeah, we support 2 national graduates through the impact scheme every year, and they don't start necessarily at the same time, so that they overlap through that, and they do a series of placements across the organisation. So we're continuing to do that.
Councillor Benja.
We seem to have a magnificent range of support and benefits. And I'm just wondering, when the bar is so high already, is any improvement really possible? And if so, what?
I think coming in, I've seen that, and it's a positive place to be as an employer of choice with pay and reward and package as we've got. I think it's important just not to be complacent on those kinds of things and actually continue to support our managers and our employees. So things like hybrid working, the mental health awareness and those kind of things, where we can see some slight direction of travel and those kinds of things, then we will be continuing to do that.
Thank you. I'm going to take a turn. So you mentioned that the increase in the workforce is due to the digital transformation team and the housing compliance. My understanding is these things are both temporary measures. So would I be right in thinking these are fixed term contracts and we should expect the workforce to be reduced later on?
Yes, I mean, the digital post, and again, Liz might want to add in there, they're on fixed term for project based, those kind of things. I would say housing posts generally, I think, are permanent posts in compliance. So they were brought in as part of a review and those kinds of things. And the third category is that we had quite a lot of temporary posts in legal, and so we moved them to establishment posts. So that was the other increase we had.
Did you want to say anything on that, Liz? No? Okay, you don't have to. Okay, Amy Morgan.
Thank you. Just an observation. I'm also on the EDI forum or committee, and I did have a quick look at previous staff reports and noticed in this one on the gender pay gap, we dropped the median value. I was just interested to know if that was intentional or that's something that could be reinserted. Obviously, we showed the mean, but not the median. Thank you.
Yeah, members, I'm going to have to take that one away and have a look at it. Thank you.
Thank you, Councillor Godfrey.
Thank you. What proportion of average proportion of time is spent working in the office as opposed to working from home?
It's 50% at home and 50% in the office.
Can I ask an addition on that, which is that standard for council workers? Would you say that's benchmarking against other councils? Is that the same offer we're making to employees of other councils?
I would say so, but I don't know if Liz would start in.
I only wanted to just add to the first point that yes, we have a policy as a council of a minimum of 50% of time in the office, but it varies hugely between the different departments. There are some front-facing staff who are in 5 days a week, but the minimum that we ask of people for that additional benefit of collaborative working is for 50% of their time, at least 50% of their time, to be in the office.
Councillor Brophy.
I think whenever I hear questions about working from home policy, I think, well, that's the wrong end of the telescope. It's also about the outputs and not the actual method of work. I mean, how is that benchmarked? I'd be curious to know about if there's any efforts to benchmark the efficacy of work from home, hybrid work, and if you've seen any improvement, any diminishment in performance, or any increase in satisfaction based on surveys.
I mean, I think all I can say generally across our employers in our area, that's pretty standard. And I think a lot of employers after COVID felt they really looked at their employment policies, and it was one way of retaining and motivating workforce. And I can see it come out quite clearly in the employee survey satisfaction scores. And you could also see it sometimes in things like sickness, short-term sickness figures. You absolutely, if people are sick, you want them to be sick. But I think people do find the flexibility a hybrid working can offer really, really rewarding and really giving people the balance. And I think as far as output, again, you know, in CIPD documents again and again, quite clearly about productivity, it increases productivity because it gives people the flexibility.
Excuse.
Again, if I can just add to that, we as an organisation have embraced the use of technology to make sure that even when staff aren't in the office, they're able to take part in meetings, they're able to talk to customers, answer the phones. So there shouldn't ever be a case where a customer would phone up and they're told, I'm really sorry, you can't speak to them because they're working at home. So, you know, we've embraced hybrid working and we're using technology to make that seamless as possible for people.
I have a question on mental health, which I've noticed increased. You're capturing data in terms of whether it's personal or work-related, but I'd say there's possibly two different types of work-related mental illness. There's work-related in the sense that it's resulting from the working conditions or the workload, or there's poor mental health which might result from attending a particularly traumatic incident. And obviously things which in the first category are things that the council can address and do something about. And the second category is stuff we can't do about. So are you capturing that difference in the data?
We do have further data available case by case. I will just need to check. I think those particular categories are set sort of a national standard of categories on sickness, but I can have a look at that for future to see whether we can separate that as far as the categories that we have put in the report.
It's not necessarily for the report, it's for the benefit of human resources, that if there is a particular issue with working practices that could be addressed.
Yeah, okay.
Any debate on this item? Councillor Power.
Thank you, Chairman. It's very good to see the retention rates improved. I think that's a real plus and a great credit to us. Councillor Lee made the suggestion that this committee should look into absence rates or sickness rates in one area of the council. I feel that would be totally inappropriate. Our reports are in the public domain. These matters are personnel and they are to be dealt with by personnel, not and their line managers, not by this committee. Thank you, Chair.
Thank you, Councillor Chamberlain.
Thank you, Chair. Just to build on that, I think I recall from a previous year's report as well. I think we whilst we have an appetite for data and understanding it, we also need to be a little bit careful that you don't have to delve too far before you get to individual cases and their therefore potential scenarios where you have people who are sort of personally identifiable, which is something else that we also need to consider as a committee.
Thank you. If there's no further debate, then I move that we note with such a due diligence and veracity and so forth with this report. Is that agreed? Agreed. Agreed. We've been going quite a while. Would anyone require a comfort break for 5 minutes or should we keep going? Keep going. Okay, that's good. And item number 12 is the annual audit conclusion. Anthony Harvey to introduce. Thank you.
Thank you, Chairman. Good evening, members. So I'm providing for you this evening my annual conclusion report in respect of the 2024-2025 municipal year. It's been quite an interesting opinion to write this year for a couple of things, really. One is I have to base my opinion based on all the work we undertake, which is certainly telling me one thing. And then clearly there's been some issues that have emerged elsewhere that I also have to take into account. So if I can start with the one side of things, which is all the work that we have undertaken during the year. Agenda page 148 shows the breakdown of the assurance activity and other activity that has been undertaken in the year. And based upon that work, with 8 substantial assurance opinion reviews, 5 reasonable, 1 limited, and then, as I say, some other work that has been undertaken, with further information provided in the appendix of what reviews that relates to. That's obviously telling me one story. Based upon that work that has been concluded, obviously I need to draw out key themes in and around governance, risk management and control. So starting with governance as reflected on page 149 of your agenda pack, a lot of the reviews that we have undertaken have been strategic, have been corporate cross-cutting, have been of a corporate governance type nature. And I think the outcomes of those reviews, with 2 or 3 that were substantial, a couple that are reasonable, governance arrangements are strong. But what I can't ignore is obviously the issues that have emerged in and around the housing areas. Also, as I say, you have to comment on risk management, and again, where it was particularly relevant within specific reviews, to look at your risk management arrangements in more detail. So, for example, within the programme and project management audit, and also within the TC25 programme, again, that confirmed that risks are being actively managed, reported, reviewed, discussed, and presented to relevant reports, relevant bodies and within the reports. And again, we can see throughout the year that there has been regular reporting on risk management through to this committee as well. Based upon the areas of control, again, our work is really highlighted good control areas across the majority of the areas we've looked at. However, there was one review in and around developer contributions where we concluded with a limited assurance opinion, and the summary of that is provided on page 151. So then what I also then need to do is weigh up the other source of assurance. So there was 3 key areas that we've been able to look at this year. Firstly, the LGA Corporate Challenge Feedback Report, in particular looking for governance, risk management, control issues that may have been identified as part of that report. And after reading the report in a lot of detail, seeing the corresponding action plans, to me, the governance issues which were flagged were more opportunities for improvement rather than the flagging particular issues that needed to be addressed. Again, moving on to the cyber security risk assessment, the Thrive piece of work. Again, it was assessing you against a particular framework that you may or not have wanted to have fully adopted, but it was a benchmark to assess you against. And again, it did identify a lot of areas where it matched the framework and controls and arrangements were really strong, but it also identified potential gaps and opportunities. I understand the team have developed an action plan on how to address those issues, and that, subject to approval, will be looked at within this year. And then finally, there's the issues that have emerged in and around the sort of housing. So again, as was mentioned previously, a piece of work was undertaken in advance of the new standards coming in. You did your own self-assessments. You also commissioned another body to work with you. And then based upon that work that was undertaken, you chose to do a self-referral to the relevant body. And then obviously that's developed and culminated within their judgment, which I believe was released towards the end of, around about the end of April of this year. So weighing all of those things into account, I think clearly there have been some isolated governance, risk management, potentially control issues that have emerged in one particular area. But for me, it doesn't feel like it brings down the organisation as a whole in effect. So I think really when I weigh up the work that my team has undertaken within the year over those key areas of governance, risk management and control, and then also look at the work of the other work as well, I think it's fair to say that my opinion is reasonable based upon the work that has been undertaken, but clearly there are some issues that we have to note. Just moving on to some other areas within the report. So in and around anti-fraud and corruption. So again, first couple of paragraphs note in and around the work that the council has undertaken, but also during the year, there were some concerns that were reported both internally and also directly to ourselves. But the first we knew was obviously when Liz contacted ourselves to say that some concerns had been raised under the report and concerns at work or whistleblowing policy. So we met with the individuals to discuss their concerns. There were more than one individual, so we grouped those concerns down once we'd met with everyone, and it came into sort of certain themes. some of which indicated potential irregularities and some of which included potential control weaknesses and non-compliance with controls. So our counter fraud unit were separately commissioned to undertake 3 specific investigations in and around financial, statutory and contractual irregularities. And then we also have undertaken a separate review specifically in and around the housing asset management area. So the first investigation, again, did highlight some particular areas where things didn't quite go in accordance with how they should have gone, but it didn't indicate evidence of financial irregularities. The second investigation, which again I think culminated in the was part of the referral to the RSH, was in and around where you were reporting potential misinformation. Now again, under that, I think the review certainly highlighted poor record keeping, insufficient management coming out of those systems, and some of the wider work that was also undertaken did also indicate issues. But the investigation did not conclude that basically those reports to the relevant external bodies were deliberately or maliciously sort of manipulated to provide a better picture. I think it was really just the underlying information didn't really stack up. And then the third investigation was certainly in and around the duplication of jobs and approval of work where there had been little insight into the work. And I think this review is a little bit more sort of conclusive in the sense that there were some issues that have been raised during that investigation. I think that's been borne out in amongst some of the other work that has been undertaken by other bodies as well. So really just with the rest of the report, I think, you know, there's the resource implications that I've needed to bring to your account, either both internally or externally. There's been no questions of my independence. There's been no impairments upon our work undertaken. So I don't think there's anything else adverse to report, but it's, as I say, it's been quite an interesting opinion to pull together this year based upon those 2 sort of factors. So we'll pause there, but more than happy to take any questions if there are any.
Thank you. Councillor Pat.
Thank you, Chairman. We had a very good presentation last night on how the plan is going to rectify the housing problems. However, SIL and Section 106 monies are of great interest to councillors. Could we have a précis of how that is going to be addressed and how it will be reported to this committee, please?
Certainly. So that review, I believe the draft report has now been finalised as a management action plan around the weaknesses that were identified in the controls of the system, and we can bring an update to committee on how the action plan is going to rectify.
Thank you. Any other questions? Well, I shall leap in. Regarding the fairly worrying section on anti-fraud and anti-corruption, and the various weaknesses that you discovered, looking at your action plan for next year, that doesn't seem to cover this area again. And I would assume that if you'd found weaknesses one year, that'd be the first thing you'd look at next year. Is that the case?
No, it's included in the plan for next year. I can cover that when we come on to the plan.
Okay, thank you. Councillor Briffy.
Just a question on the whistleblowing process that raised some of the big concerns that are now being addressed. Have we been satisfied that that process was working adequately? Is this almost a something we should celebrate, that the actual process has worked there and the kind of control we have in place has been successful?
So yeah, I think you've got a well-established report concerns at work process. Those matters, it's clearly outlined within the policies that are regularly reviewed. I think they're to be reviewed annually. And those concerns were dealt with in line with those policies. We, as the internal audit service, but obviously external to the council, are kind of like the last port of call for those reporting concerns at work. And as far as I'm aware, all of the due processes were followed before they were referred on to us. As soon as they are referred, obviously we treat them with strictest confidence. We do have a dedicated team that can investigate those issues if it kind of falls within their remit. If not, it's work that's undertaken by ourselves. So I think, again, if I'm taking a step back and looking at the wider governance arrangements for the organisation as a whole and that's telling me, the fact that those concerns did get raised through that process, and also the fact that some of the outcomes of the work did come from your own self-referral to the regulator. Again, it kind of it says to me that the governance is strong rather than it indicating a widespread corporate governance issue, but clearly there are some sort of issues in some specific areas.
Do you have any more questions? Or I have a question again on the CFU investigation. Given that you mentioned that no incorrect submissions were made deliberately or with intent, you say you've nevertheless referred the investigation to the police. But have the police taken this any further, or is this just a part of the normal part of the process?
Sorry, we didn't refer it to the police. It was my understanding that the whistleblowers may have raised those concerns directly with the police, so the police came in contact with ourselves. If, when we conduct an investigation, if it then turns out there is the identification of fraud and irregularity off the back of those investigations, then we will consider a referral to the police directly, but only in consultation with the relevant bodies. So obviously, clearly, Gareth would have active interest. So with these, the police became aware of them because the whistleblowers went directly to the police to raise those concerns. So of course the police were aware. On the conclusion of those three separate pieces of work, the police requested the copies of those reports as they're legally entitled to do, and in line with the internal audit charter, we obviously release that information to them if they give us the relevant forms, which compels us to comply with the police, which we have done so, and as far as I'm aware, they have closed their case based upon the outcome of that work.
Thank you. I was trying to wheedle out whether any arrests had been made as a result of this and so on. The case has been closed. Is far more reassuring. Thank you.
Again, I can't answer to what work the police would have done directly in this area. I think the concerns were raised to them, and they have received the outcome of our reports, which again didn't indicate fraud and irregularity over those three things, but obviously have highlighted some wider issues.
Any further questions from councillors? Then I shall move to debate. And moving swiftly through debate, we move to noting the internal audit report. Thank you. That's agreed, is it? Agreed. Thank you. Excellent. And so moving forward to the future, the plan, the internal audit and scope-based plan 25-26. Anthony Harvey. Thank you.
Thank you, Chairman. So the second paper is split into two parts, and it's one of those reports that are actually for approval, not for noting. So it is within the remit of the committee to, and in line with all of the relevant standards that we adhere to, that you do approve both the charter each year and the risk-based internal audit plan. So if I can take the charter first and then pause for questions if there are any, and then move on to the plan. So the charter won't be a new concept to the committees. It's been a requirement. You have one for at least the last 12, if not more years, and we have provided charters for you throughout the duration of that period that were in line with all of the previous standards. With the global internal audit standards coming into effect from the 1st of April of this 1st of April 2025 for the UK public sector, or slightly earlier for the private sector. as a requirement of the new global internal audit standards, it has made some additional requirements that we have needed to reflect within the charter. So I don't think there's anything in there that will cause too many surprises, and it certainly builds upon a lot of the areas that will be very familiar that were included in previous charters. But within the global internal audit standards, there is more prescription in certain areas, and we feel that has been reflected within the revised charter. So previously, when I presented the charter to the committee, I'd pretty much say it's the same as it was last year, just with a different date on it, because the standards haven't changed. But this year is quite unusual because the standards have changed. It does need to be treated as a completely new document in its own right, and obviously considered appropriately. It is very important. It does outline our roles, responsibilities, how we treat that information, the respective reports that you'll expect from ourselves. What the standards outline is the result, the role of the committee and the senior management team, and the relationships between that and internal audit. But as I say, it's really part of good governance, and it's what you'd expect, and really just builds upon and expands upon what's gone before. So I'll pause there if there was any specific questions on the charter before we move on to the plan.
Councillor Godfrey.
If I may, because I think the point there maybe Mr. Harvey was very interesting about the relationships with senior management team. In the next paper, we see that there's only one outstanding action, which is extraordinary improvement compared with recent years. I'm hoping, and Mr. Harvey will be able to confirm this, but this indicates that there's a good relationship between the internal audit team and senior management and the council. And if that's the case, you know, the plan we can will the risk plan will be reflect that good relationship.
It does indeed. Yeah, we've always had a very good relationship with the senior management team, the corporate heads of service. Before we obviously move on to the plan in detail, obviously the more open the management team are with flagging areas of concern or areas that they like to look into, then, you know, the more trust in that relationship is, then the more you're going to get out of internal audit. And we've always had a very good relationship with officers. And I might continue.
No further questions. Go for the second part, please.
Thank you. So a little more interesting than the charter that I appreciate is quite a dry document. So I'm pleased to give you, sorry, my laptop shuts down after about 2 seconds. Good security features, I'm sure you'll appreciate. So the second paper is the risk-based internal audit plan for 2025 to 2026. So we go through a really extensive exercise when we're pulling together the plan each year, and we take a huge range of factors into account. One of the primary sources that we start with are your risk registers, both your strategic risk registers and also all your service risk registers, to really go through them, highlight sort of recurring themes, particular areas of concern, particular areas that have been flagged pre-mitigation of the established controls rather than post-mitigation, because obviously one of our roles is to come in and provide the independent assurance that those controls are operating, are managing those risks down to the levels expected. We also take a whole raft of other things into account, so all of the respective reports that go through to the different committees, any national developments or any areas that are flagged as part of our work with other organisations that we can come in and proactively look for here. But again, one of the other key areas, as Councillor Godfrey referred to a couple of moments ago, is really getting those insights from the senior management team in terms of those areas of concern that can be looked at as well. So we throw that all into the mix when we're developing our plan, and the plan that we've provided for you, again my laptop's jumped around, but it starts on page 197 onwards of your agenda pack, kind of outlines the areas that we feel need to be covered this year. So it's a mixture of those strategic kind of corporate cost-cutting areas, mixture of your good old bread and butter financial system reviews that you wouldn't expect there to be problems with really well-established systems, but where they're so material to the organisation, we have to look at them periodically anyway. And then some of those more sort of service-specific areas. Now, where we take a risk-based approach, primarily the areas that we will focus on are those areas that we've assessed is sort of high risk first, then we move on to the medium risk areas. We wouldn't normally include anything that's been deemed as a low risk area unless there's actually a requirement for us to look at it. And in line with previous years, there's a couple of areas we have to look at each year just in terms of sort of grant certification that's expected from the relevant government bodies, and also an element of certification around the Mayor's charity account. But with those exceptions, I think everything is really sort of proportionate and aligned to what the organisation needs. And in response to your specific question, Chairman, in and around whether or not the housing review does feature, obviously when the plan was initially developed, some of those issues were still kind of crystallising and emerging. We're well aware that the team are working with the regulator of social housing on a monthly basis to work through the action plan. So what I've included within the audit plan on page 199 of your agenda pack under housing is a provision for the scope for 1 or 2 reviews to complement all of the other work that is being undertaken if need be. But clearly, if the council are working with the relevant specific regulator for that particular area and they are providing that ongoing assurance, and as mentioned by Councillor Cutler earlier, those reports are going through to the relevant committees. We won't look to duplicate any of that work, but in any way that we can complement it or add to it, then of course we'll actively discuss those areas with the management team as we go along. One of the things that I always say each year, but I think it's so pertinent now more than ever, is the plan is designed to remain fluid. New risks will emerge, new issues will emerge, things may crystallise in and around LGR and devolution. So we will keep the plan under constant assessments to make sure that those areas are picked up and identified. Any proposed revisions to the plan, either in terms of anything that comes out or anything that comes in, will always be transparently reported through to this committee for approval in line with previous years. So again, I'll pause, Chairman, but more than happy to take questions if there are any.
Just to clarify for my benefit, the item I was asking about, that's under service reviews housing, is it? That's the provision of days for housing reviews. That item is the one which is picking up on investigating the issues with poor reporting and so on. Thank you. Councillor Chamberlain.
Just to check if I understood this correctly, so where you have the last column quarter, so this is the planned quarter for the work to be undertaken. If that's the case, there's quite a significant amount of the audits happening in the fourth quarter. So can we be confident that the plan is resourced and we're not going to see an overspill of audits into the subsequent year?
When we're delivering a plan, especially in terms of it's now already in Q2, obviously those are an indication of when the work's going to be substantially delivered. I can't sit here and hand on heart and say absolutely everything will be finished by the 31st of March. It's more with the annual conclusion report coming through to July, I would expect the vast majority of that work will be concluded in sufficient time as to then inform my annual opinion for hopefully this time next year.
Understood. I guess the supplementary then is there's quite a few that are flagged as a high internal audit risk assessment, but at the back end of the fiscal year. So is that taken into account then when prioritising work if things get stretched, I would say, towards the end of the year?
Yeah, again, we will continually keep all of those quarters and all of the work under assessment. If we do find ourselves in the position that I have to come back to the committee and say I don't think for whatever reason we've got sufficient resource to deliver the agreed internal audit plan, then by its very nature, we will focus on those higher risk areas first. But to be honest, I think with one exception, the areas that have been flagged as based upon our assessment as a medium risk are those sort of core financial systems where you would expect there to be coverage over an audit cycle. So yeah, it's just about timing those reviews to be at the appropriate time as well.
Thank you. Councillor Brophy.
You briefly mentioned LGR, but this isn't it doesn't have a line item. Yeah, it's not an item in itself, an assignment in itself. Is there going to be a point where I suppose managing the risks of resourcing that and how that could impact various kind of work streams, or is it so all encompassing that it's kind of runs through everything now at this point?
Yes and no to that area. It is all encompassing. I think it's one of my requirements on the charter and in the report that went previously, is if we're finding that the organisation doesn't have the sufficient capacity to facilitate those reviews, then I will need to, as well as report back any resource and constraints on our sides. If we're finding that we can't undertake the work, that there are resource and constraints on the council side, then obviously I'll need to bring that to your attention. With regards to specific reviews on LGR, devolution, all the rest of it, I think it will feature in future years. I don't think there will be anything specifically auditable that we could be doing before the end of March of next year, because I think there's just so many unknowns. Because I think even once the submissions are made to the government, I don't think they'll be making their announcements until the new calendar year. So in terms of that featuring in the audit plan for this financial year, I think would be unlikely. But as I say, we'll stay under constant review, and if suddenly things do crystallise a little bit more, then of course we'll react accordingly. But it's going to feature so heavily in future years, I think, because it is obviously going to be such significant change, and with change comes risks.
Thank you. Apologies if I've got this wrong because I'm new and I'm going back to what the number of risks from last time. But then it looks to me like the number of high risk areas has significantly increased, yet the total audit days has decreased by 18 days. So just double checking that we're confident that we've assigned enough audit days for the work that's required. Thank you.
Again, in line with the charter, in line with all the relevant standards, if I feel that insufficient resource is provided for me in order for me to provide our assurance work, then my first port of call is obviously to go to the Section 151 officer and discuss and negotiate if more resources are required. If I feel that there's a difference of opinion, then I have, and is in line with the charter, there is the recourse up through to both the chief executive, any member of the senior management team if required, but also through to yourselves, because obviously it's the body ultimately charged with governance. If I don't think I'm being given sufficient resource to do my role, then I'm duty bound to report it through to you. I think at the moment, the level of assurance work is proportionate to the size of the council. But where do you start and where do you stop? You know, the bigger the plan, the more the draw there is on officers' time, and you know it can sort of create issues in its own self. Too small a plan, then you can only really cover on things at such a high level, then perhaps it doesn't really give it service. I think we've been working with yourself since 2013. I think when you originally joined the plan, was it something like about 470 days, and gradually over the years it just became apparent that it was just too excessive each year. So it has reduced down to what I think is an absolute proportionate level. But of course, if it proves not to be the case, then we'll bring that back to this committee accordingly.
Thank you. Any further questions? I think it's a very thorough report. So the lack of questions indicates how thorough the report is. So I shall any debate, and then so I move that we Councillor Lee isn't here, so we can just say we noted the report now. Oh, Councillor Brophy.
Just by way of debate, I just noticed on the markets, the assurance of income collection and banking is one of the high risk areas that you are looking at. So obviously it would satisfy Mr. Tate if he was still with us tonight, but it's been raised earlier in this meeting.
Yeah, I'm sure he's watching on YouTube. So
it's good to see here though.
Okay, so thank you. And moving on. Which is item 14, governance monitoring, Summer Housing report. Thank you.
Thank you, Chair, and good evening, councillors. This Q4 governance monitor report covers the period January to March this year and provides an update on a significant number of areas of governance at the council. We've already heard this evening a number of comments around governance and governance reporting and our governance framework. I'm pleased to report that there were no internal audit reports issued during the quarter with either limited or no assurance. There were 5 finalised reports concluding with either substantial or reasonable assurance. Looking at the progress of the internal audit management actions, as we heard earlier, officers have continued to make very good progress completing these within agreed timescales. And as at the end of March, there was only 1 overdue action, which I think is probably the lowest it's ever been, or for some significant time. That particular overdue internal action relates to the recent audit review of our new homes programme, and there is a brief update on the progress of that particular action on page 120 of your pack. I'll just quickly run through the report. A brief update is also provided on the progress of actions addressing weaknesses identified in audit reviews that concluded with limited assurance during the past year. Pleased to update members that the actions relating to the information governance records retention audit have now all been completed. I should mention that internal audit undertook a follow-up as part of their audit programme, a review of this area, and concluded with a reasonable assurance opinion. A lot of work, as I think you're aware, we've reported through the year and the quarterly reports has now been done. That previous internal audit concluded with a limited assurance, hence it coming here with an update each quarter on the progress that officers were making. So that has moved from limited assurance 2 years ago to now a reasonable assurance opinion, which really does demonstrate the work and the effort by officers in that particular area. Appendix 1 to the report provides an update on the actions aligned to the information of the annual governance statement, and you'll see the issue there was around records retention, which the actions have now been concluded and won't, as the second report shows, won't be carried forward to the annual governance statement for next year. Appendix 2 provides an update on code of conduct complaints received since the last meeting of the committee in February and the number of complaints closed. The appendix also provides details of a breach of the code of conduct and the outcome of the investigation by the monitoring officer in consultation with the independent person. Appendix 3 provides an update on the corporate risk register, and I wanted to draw to your attention some of the changes that have been made since the register was last reported to you, and these are briefly outlined in the report. Most significantly, and I know it was talked about in the last meeting, it's been talked about during this evening's meeting as well, that 2 of the risks, risk CR001, CR007, which are around capacity and around financial stability, have been updated to include local government reorganisation as a cause that may lead to an increase in either the likelihood or impact of the risk occurring. So most likely the cause there of the risk occurring. There's also been some changes in the name of the responsible officer after the strategic director left the council during the quarter. Some of you will be aware the new strategic director has recently started at the council, and they will be updated for the next report of the corporate risk register. One final point I'd like to just draw to your attention, which was raised at the last meeting of this committee, was that the report now includes details of the dispensation requests granted or refused during the quarter, which was requested by this committee at the last meeting in February. Paragraph 15.2 of the report provides details of the individual dispensations. Happy to take any questions, Chair.
Thank you. Any questions from members of the committee? Councillor Power.
Thank you, Chairman. Mr. Howson, could you assure me that I will never ever again see records retention and disposal on this report?
I give you assurance that given the good work that we've done, we now have a robust retention policy in place, a schedule in place that will not reappear.
I think I'm going to miss it, actually. It's been sort of it's an old friend turning up at every sort of audit and governance meeting. Yes, I have a question regarding the risk register CR008, which is availability of new homes. And forever watching the little draft piece moving from red to yellow. And because the thought of government intervention over our housing plan is what keeps councillors awake at night, is there anything more we could be doing to move that white disc into the green area and reduce the risk? Please.
So I think the thing that moved the risk down into the amber area and out of the red was when we changed the corporate policy around achieving the 1,000 homes target through acquiring property from developers rather than attempting to build it all ourselves. So that was a significant change and has helped to open up the pipeline and give more assurance around the ability to reach the 1,000 homes target. So I think that policy has had a big effect.
But is there anything in addition within our powers, anything more that you think we could possibly do?
I don't think so. The new build team are constantly assessing opportunities for us to build and purchase. And as I say, it's had a positive effect on the number of properties that we're bringing into the HRA annually to meet that 1,000 homes target. So I don't think there's anything more that the team could be doing.
Thank you. Any other questions? Councillor Chamberlain.
Thank you, Chair. My question is regarding CR1, and I guess I was surprised to see the likelihood of the risk decrease, although local government reorganisation is sort of called out under the what might go wrong column. Surely, with the amount of effort going into LGR at the moment, that's something that would mean that the likelihood of that risk would be maintained, at least if not increased, or am I being unfair?
So this is the corporate risk register as at the 30th of April, and it's just been back to ELB this week. And we've put a little bit more information in around LGR. Obviously, we're taking mitigating actions such as taking on contractors or seeking external assistance where we need that to ensure that we can continue to deliver those frontline services that are so important to the council and deliver those council plan priorities.
Any further questions? Then I shall move to debate. Councillor Godfrey.
I think we ought to commend the officer team for great progress in the working relationship with the internal auditors in dealing with outstanding actions. Thank you.
I'm happy to reiterate that and add my emphasis for that. Thank you very much. Councillor Power.
Thank you, Chairman. I'm not sure whether it's luck or good management, but I have noticed that since we see the report on complaints to the standards, on the grounds of standards to every meeting, there are very few cases being brought forward. So whatever it is, it's working.
I think let's not put it down to luck. Let's put it down to good management. Though obviously it's a great disappointment to be chair of a committee where you don't get to have subcommittees investigating fellow councillors. Any further debate? Then I should move that we note this report. Is that agreed? Thank you. Okay, moving on to item 15, the Equality, Diversity and Inclusion Annual Equality Report. Someone to introduce. Thank you.
Thank you, Chair. We brought a very similar report to yourselves, this committee, at this time last year. So this is the second time that we've brought this report. And it presents an update on the work undertaken across the whole council, all of the services, demonstrating compliance with the public sector equality duty, which requires public authorities to eliminate unlawful discrimination, harassment, victimisation, and other unlawful conduct prohibited by the Act, advance equality of opportunity between people who share and people who do not share a relevant protected characteristic, as well as fostering good relations between people who share and people who do not share a relevant protected characteristic. At the last meeting of this committee, members adopted an updated equality, diversity, inclusion framework for the council, which included an updated EDI strategy and action plan. That action plan is very much driving the work across the organisation. We now have a dedicated officer group that meets regularly and takes responsibility for delivering the actions that are in that plan. As already been mentioned once this evening, we also have the EDI Members Forum, which still meets very regularly, takes obviously a very active interest in the work that the council is doing towards that action plan, as well as an outward focus on EDI issues across the district, looking outwards from the council as well. The action plan, as I said, is very much driving the work of the council, and in the appendix there's an update on the actions and the progress that's been made against those actions by the officers responsible for those actions. And what I've included in the report, as we did last year, was a number of those highlights that sit underneath each of those equality objectives that were approved in February, to really give a highlight, to give a flavour of the really good work that is done across the council in meeting our statutory obligations under the Equalities Act. So I think it's a very good report. It shows the hard work and the efforts that the council do in meeting its statutory obligations and complying with the requirements of the Equality Act, as well as the public sector equality duty. Happy to take any questions, Chair.
Thank you. Any questions from members? I think we should not take that as a criticism. We should take that as the fact that it's a very thorough and report for some excellent work, and we are glad to see that no deficiencies leapt out at us. Just first a question. Shall I move to, Councillor Brophy may have spotted something different.
Unfortunately, no tires to kick, but on debate, if you're happy to move to this.
I move debate.
I noted the Central Winchester Regeneration talked about how you're working hard to include many different types of stakeholders in consultations. Also, that jumped out at me when I was looking at station approach consultation process, and I was really impressed by the work that the teams have done to reach out to and do workshops with school children, for example, who'd be using the area. And I was actually really impressed by that, because I think one of my biggest concerns is that, you know, we often listen to the people who talk to us and talk to councillors and talk to councils, which is, I think, a fairly rarefied and strange bunch of people who take as much interest as we do in such matters. So it's really good to see the amount of proactivity that's gone into kind of reaching out to different people, and, you know, very impressed.
That's many excellent points made there. Shall I like to reiterate? Councillor Chamberlain.
Thank you, Chair. I thought it was just worth noting at a time when EDI is getting a fair share of attention in the national media. It's great to see the breadth of activities that are covered in this report. I know the sports coach provider, from one of which the session was in my ward in Wickham, was very well received. So I just wanted to note that.
Thank you. Yes, I think when other councils are trying to sort of cut back on their EDI work, I think we appreciate the value of that work in this council, and we value it, and we endorse it and take great pride in how efficient and effective it is. Thank you. I shall then move that we note this report. Agreed, thank you. And that moves us to item 16, Simon again, with the annual governance statement. Thank you.
Thank you, Chair. This report presents the annual governance statement for the Council for 24-25. It's a statutory document and integral to the governance framework for the Council. I'd like to start by drawing attention to the actions that were in the previous annual governance statement that have been completed and therefore will no longer appear in the annual governance statement. And we spoke about those during the earlier paper around retention and disposal, which is included in the previous AGS. So for the completion of the draft AGS before you this evening, we worked closely with our service leads and corporate heads of service who completed a statement of assurance for their own service areas for their teams, drawing out those issues of weakness, which helped us to create the annual governance statement. And as included in the annual governance statement, 2 issues have been identified and are included in the draft AGS for 24-25. The issues relate to the regulator for social housing, consumer standards for landlords, and also local government reorganisation. I know we've spoken quite a lot this evening about both of those. I think what I would just reiterate, and it was mentioned earlier, regarding to the regulator for social housing, it is for this committee, and why it's included in the annual governance statement, it's very much around the governance issues. We've not included the whole action plan, as was said earlier this evening. That will be monitored by Cabinet Committee Housing, and I think it's on the agenda for the meeting next week. What this committee will be concerned around is the governance, how we respond to those, how we tighten up on our governance arrangements for compliance with those standards. And what we will do, as we do with the issues in the annual governance statement previously, is bring a quarterly update to you in the governance monitoring report, so you can monitor the progress in responding to those governance issues that have been highlighted and flagged. So they're the 2 issues that are in the draft annual governance statement. Similarly with LGR, that's very much emerging. That will gain traction, obviously, as time goes by and we learn more. Again, that's around the capacity of the organisation and looking again at the governance arrangements for LGR, not necessarily the monitoring or having comment on LGR overall. So we've got a draft action plan included in Appendix 1, set out against the 2 issues. They will come back as part of the quarterly monitoring report, so you can monitor progress against those actions. Just finally, I'd bring to your attention that the draft AGS was published with the draft accounts at the end of June, which we are statutorily required to do so, but it's brought forward to you this evening for formal adoption. Happy to take questions, Chair.
Thank you. Councillor Godfrey.
Really, it's a repeat of my previous question to the external auditor. How do we ensure that we don't duplicate effort between the efforts of the officer team and the auditors when dealing with the landlord, the housing governance issue?
Ms. Keys?
The work around the action plan to improve the housing area and work with the regulator for social housing is very much being led by our housing team and by officers at the council, and working hand in hand with the regulator to ensure that the actions that we take have the outcomes that are necessary to meet the new requirements. And we are then feeding that information and the feedback that we get from the regulator to the external auditor, who will ensure that we are on track to meet that action plan. So the work is very much being led by ourselves in consultation with the regulator, and then the external auditors will look at the results of that work.
I'll just add one point to that, in that the housing team are meeting the regulator on a monthly basis. And I think that's quite an important part of this process. It's not just work against our action plan, but actually working with the regulator. And we have assurance from Mr. Hendy at the last meeting where we discussed this, that it is one team they're meeting at the regulator, so they have assigned caseworkers that they're meeting on a regular basis. So it's not going to be chopping and changing about how, you know, the opinions of the regulator of how we're responding. So I think that's an important addition as part of the sort of governance process, to recognise that the governance process will be that we'll be monitoring it through the Cabinet Housing
committee. But what's actually happening on the ground is a regular meeting with a regulator. So I think, to answer Councillor Godfrey's point, which we've already done, but I'll just add to it, is that all that information will go to the external auditors, and so hopefully they won't have to spend too much time, additional work on that aspect of it.
Following on from that point, so Councillor Cutter might want to not sit down, when would we expect to be compliant with all the regulations and get a clean bill of health from the inspectors?
I'm not sure the exact timetable for that. We could be assessed or inspected within the, I think by 2030, I think it was within, no, it was past 2028, within 4 years of the regulations coming into force. Because of this process of having self-regulated, the chances are we will not be inspected until we've reached the level of compliance, because we're working with them at this stage. So we have 4 years to do it in, but we would have to be inspected by the end of that, and the hope would be that we'd be well on the way. I think the view is we're well on the way now, but some aspects of it will take time. Until we get to Cabinet Housing next week, and I will put that question and be able to report back to the next meeting.
Thank you, because I'm sure it's more urgent than 2028. That seems like a long way off.
I'm just referring to the action plan in the papers that were dispatched for Cabinet Committee Housing. I can see that the majority of actions are due by the end of 2026. So we're talking about things within the next 18 months. You know, we've taken this very seriously and we're prioritising those actions. But yeah, we're talking about things in 2025 and 2026.
That's the action plan on page 261, isn't it? That's as part of the annual governance statement.
Sorry, I was referring to the action plan for the remediation of the points around the social housing regulator. Right.
So for our own peace of mind, will we compliant by middle of 2026, even if the inspectors aren't giving us the green light? For our own peace of mind, we will know that we are complying anyway.
Yes, that's the plan.
Thank you. Any further questions? We'll move to debate. And no debate, then we move to noting the report. Is it agreed? Thank you. I think that's all been done for the evening. Thank you very much.
What are we noting that?
And noting the annual government statement.
Chairman, I think we have to approve it.
Okay. So do we agree on it? Councillor Godfrey.
Yeah, on that annual financial report. I know, long years of service and as a government officer myself, you're not meant to read reports over 100 pages, but the significant figure comes in the first page, where this report was published on the council's website on the 30th of June 2025, less than 3 months after the end of the financial year. This is a remarkable, statutory required, but a remarkable achievement, for which we should not brush over this immense effort by the officer team to achieve this excellent result. I thank them personally, and on behalf of the committee, I think we ought to do the same.
I think that's an excellent point to make. I think because we should not let, even though it's a statutory requirement, the fact that they have done such good work in such much time should not go unnoticed or unappreciated. So on this, the recommendations are that we approve the annual governance statement for 2025 as set out in Appendix 1 for inclusion in the annual financial report 24-25. Is that agreed?
Agreed.
And secondly, that the issues arising and actions identified in Appendix 1 be noted and that progress against the actions be brought back to the Audit and Governance Committee as an appendix to the quarterly governance and monitoring report. Agreed? Agreed, of course it is. Okay, so that's that item completed, and thank you to Simon. And now move to item 17, annual financial report. Liz Keys to introduce. Thank you.
I won't say too much about this because we purely bring it to this committee for information at this stage. It feels like only 5 minutes ago that we brought last year's audited accounts for you to approve and publish back in February. And it doesn't feel right to me to keep hold of this set of accounts without being transparent and publishing them and bringing them to you until February or November later this year. So it's purely for information at this point. The team are organising for some externally facilitated training to aid in your understanding of what the document is trying to tell you about the financial status of the council, and we hope to do that in October ahead of you then being asked to approve the accounts for publication in November.
Would I be correct in saying this is an opportunity for us to make corrections or suggestions, and that later on it might be too late to do so?
No, so we have formally published our statement of accounts in line with the statutory deadline, as Mr. Howson said, the 30th of June, which is a massive feat for the accountancy team to do that and to publish those within that quick turnaround. Now they are published. Anything that changes between this draft set of accounts and the final audited statement of accounts will be deemed to be errors or misstatements by our external auditors. So we will reconcile the two, and that's where they will report to you any changes that are over £100,000.
Thank you. So any questions from members of the committee? Councillor Brophy.
With regard to TC25, I guess, again, being relatively new to the committee, I suppose I'm not as accustomed to seeing this, but in some ways it's quite opaque to work out whether this is presenting something that, you know, whether this is a good result against the target, or if it's falling short, or if it's overperforming given the circumstances. And I'm also mindful that certain activities might take a huge amount of a period you're working on before they start realizing savings. So it almost strikes me that it'd almost be better to present these as kind of a Gantt chart or something like that, so you can almost see when the anticipated changes are expected to kick in over a given period of time, rather than the actual number as a static thing, because we've talked before about how numbers in isolation are fairly meaningless to understand, and that one really jumped out at me because that's also one you're quite curious about. And I think there's the narrative there does kind of start presenting more questions. So there's a number for the amount that has been saved in budget reductions. There's also the amount that actually could have cost more had this program not have gone on. So there's different ways of interpreting that, and I think presented as is, it almost presents more questions and more mystery about what's happening.
Thank you for the feedback. I think when it comes to TC25, there's a lot more information and transparency when we do the out-term report to Cabinet and then pull together the medium-term financial strategy and the budget in November and February. So we're able to be a lot more transparent about the plans, whether we're on track, and the savings that we've made, and indeed, as you say, the cost avoidance that we've done. The document that you have here, our annual financial report, is structured very much in a statutory way. We're required to publish a lot of this information in the format that it's in front of you in. The narrative statement at the beginning of it, we have some flexibility over. So that's where we try and tell more of a story, because even after 23 years in local government finance, a set of accounts is still quite impenetrable. You know, if I look at another council's accounts, it's very difficult for me to see the financial status. So I can understand that this is a difficult document, which is why we try and give members some support and some training in what it's telling you ahead of approving it. But yeah, I would just reassure you that I think that the story around TC25 and our financial sustainability is much clearer in those management accounting reports that come forward as we pull the budget together.
Councillor Cutler.
Well, that was virtually precisely what I was going to say. The outturn report, when it comes, is the key to understanding it more simply. I would add, though, I mean, that the narrative statement is actually a very good overview of the council, and probably the only bit of the financial statements that I ever read is the narrative statement, because it gives a broad picture. And I'd like to echo Councillor Godfrey's point earlier that it is a tremendous feat to do it in 3 months and to get it published, because although that's the statutory deadline, there are many councils that don't meet that deadline, and we've done very well to meet them. The questions on audit earlier, I think for new members, I think it's worth pointing out that we are rather the victims of this problem with external audit. There are many councils that had several years of audit to catch up when this 22-23 disclaimed audit was done to catch up, and has caused these knock-on effects. This council has actually always been very good as a finance team in terms of getting things ready for the auditors. Just the auditors were so overworked that the audits weren't done. I think that's just useful background for new members to the committee.
As a follow-up for that, is it possible for Councillor Brophy or the members of the committee to request any TC25 updates that might be available, or should we just wait for the reports?
I think if once the papers for outturn are published, if you have any questions on that, I'm always very happy to give any additional clarity.
Thank you. I'm sure Councillor Cutler was exaggerating for humour's effect, and he does actually read the entire financial statement line by line in great detail. Any other questions from members? They move to debate. Then I shall just move to, again, reiterating Councillor Godfrey's report about how impressed we are that this has been done so quickly and so diligently. And I shall move that we note the report and respect to the Council's draft statement of accounts for 24-25. Is that agreed? Then we have no further business and the meeting is over. Thank you very much, everyone. Thank you.